Alrighty, traders. Hello, everybody. Good morning for everyone that's on the down under. If you're awake right now, like crazy like me, it is currently 6 o'clock in the morning for me. Or happy Sunday for you guys up over in America. Today, I'm going to cover. Why am I talking like this for? Today, I'm going to cover the markets and I'm going to cover the details, the short term, the big picture, the support, the resistance, the patterns, and what could be coming up this week for us to get us ready for the coming week. That's what I'm going to be covering today. Hey, from the UK. Silver, please, mate. Yep, no problem. I'm going to cover that. So the first bit for this live session today, guys, what I'm going to be getting started in just a minute, is I'm actually going to get straight into the actual just purely technical analysis, and I'm going to be covering all the markets: stock market, short-term, long-term, gold, silver, rates, TMF, oil, XLE, Bitcoin, ETF as well too. So that's the first bit of this session here. And then, and then I'm going to, and then I'm going to walk you through some things that's really going to help you out when it comes to your trading, about some stuff like that. Hey, Simon's in the house. There we go. So that's what I'm going to be doing, guys. So just in a few minutes, I'm just going to make sure I've got everything set up properly. And then I'm just going to get straight into it. Again, I'm going to be doing a detailed segment on just everything through there in just a few minutes from now. But hey, mate, from UK. Hey, Thomas. Good to see you, man. Filter said, I wish the markets were open 24/7. They are. Well, crypto is anyway. I actually believe we're going towards that, by the way. I believe eventually we'll start to be like a Bitcoin and there'll be 24/7 trading. But I don't think there's going to be a lot of volume all the time, though. You want to be trading when there's a lot of volume. To the moon, to the moon. Hey, Top's in the house. Top's in the house. Santiago? Santiago? I think that's how you spell it. Did I get it right? Santiago? In the house. Greetings from Iceland. Iceland in the house. Isn't that cool? Isn't this whole internet thing cool, guys? Like, there's this guy here from somewhere around the world. And then we have all these people come together. It's pretty amazing when you think about it, right? Like, we all come together because we're all interested in the markets, right? And we all want to become better. That's why we're here, right? We just want to learn information. We want to become better at trading. We want to do really well at trading. And we'll continue to here just to try to, stay on that path. And I think it's quite amazing that we can have this platform that through the things that we're interested in, we can come together and have like a camaraderie thing, right? Because that's what we're here for, right? We're here in an interest. And the good thing about the internet is, like, people are interested in photography or anything, right? Fitness, as you guys would have seen from my fitness level. For my fitness, if you didn't see, I did a video yesterday where it was just me on camera getting ready for my 12K run, which I actually did, by the way. I did my 12K run, which was quite good. For you guys that are runners, my 12K run was, I'm pretty sure it was around 200K. Damn. I made 200K. Anyway, so I did my 12K run yesterday for you guys that watched my video yesterday. And I did, it was roughly 5-minute 20, I think it was. 5-minute 20, 5-minute 25, I think it was. 5-minute 30 per pace for that time. And then the last about a few hundred meters, I pushed it. and I got up to about 3:10. So if you guys that are runners, my easy pace for 12 kilometers, I did have a 12 kilometers running yesterday, just over 12 kilometers. And that was averaging 5:30 per pace for the entire 12 kilometers. And then the last 200 meters, I just gunned it. And through my watch, I got up to about 3:10 per kilometer pace. So if you guys know anything about running, that's moving. 3:10 per kilometer pace. Gun. I don't think I've ever run that fast there, which is good to see with my fitness level there. Alrighty. Few minutes, guys. I'm gonna go straight into the charts. I'm just gonna do a bit of background, bit of covering here first, and then to the charts. Greetings from Canada. Hey, Simon's in the house from Canada. Arizona. New York City in the house. FA did it for me, see? How cool is that? I don't have to stay in the house anymore. You guys are doing it for me. Oh, how good's that, eh? How good's that? Alrighty, guys. So let me I'm gonna get into the markets in just a minute, guys. So I'm gonna go full blown. I'm gonna go full blown into the marketing. Obviously, guys, things that I covered today, just make sure that you understand that there's risks to everything, right? One of the big things, this is not from a disclaimer point of view, but this is more like from an actual real point of view. One of the worst things I'm seeing right now when it comes to people is they're loading up too much on one trade. You know what I mean? Like there's longevity in this market here. Okay. And I'm just seeing it so much that even if you've got a smaller trading account, like a $10,000 trading account, you're trying to do like a $5,000 trade really quickly. And therefore you're blowing up 20-30% of your account, maybe more, really, really quickly. And it's just not the way to go. You know what I mean? And I'm seeing this here, you know, like, and the whole thing about there's this right, wrong attitude in these markets right now. So the fact of the matter is, you and me, no matter how confident we are in a trade, that can actually not work out and be a losing trade. And you know that, right? Even for some of you guys who give me shit about, oh, I was right, you were wrong, and all that sort of stuff, just understand that this game of trading is about being wrong sometimes, right? We just want to try to be wrong less times than right. And then in those right times where we actually make a profit, we want to try to have a big profit. When you have that, that's the game of actual trading. If you guys, I think I've two books I actually recommend, two trading books that I recommend are, I'll bring this up to here. So let me show you this here. I'll bring up my Audible. Let me log into my Audible. And I will show you this here. Let me bring this up to here. I'll show you first before we get into today's session. Here we go here. Here we go here. Okay. So this one here. So the two trading books that I recommend you guys reading, or firstly, read my book, which is at johnsfreegift.com. And that's that one. That is this one right here. So this is a free book here. You can get access to it. This is the free book, johnsfreegift.com. It's just one of the best books out there. If you really want to become a long-term successful trader, it is just, you can just see here, there's just so much here that's actually going to really help you when it comes to your trading there. But from an Audible book here, so on my Audible, let me go to my library. There's two books here that I recommend everyone should read. Obviously, there's a lot of books that I recommend you reading, but when it comes down to the trading side of things, like actual trading, for you guys that are runners and stuff like that, Go One More by Nick Bear is actually a really good book there. As you can see, I listen to a lot of books here, but when it comes down to trading, two of the best books that I've to, or some of the best books anyway, and that is the actual books here. Best Losers Wins, while normal thinking never wins the game of trading. If you actually want to learn, like properly learn, not a get rich quick scheme thing, but properly learn the art of long-term trading, right? How to have losing trades and how to manage those trades, manage the risk, all that sort of stuff. Like really become professional at this thing called trading. So this one right here, Best Losers Wins, while normal thinking never wins the game of trading. And it's such an amazing book. And I've listened to it a few times now, especially in the car. Because normally what I do, whenever I'm going, say, for example, whenever I'm going to the gym, most of the time, it takes me about 20 minutes to go to the gym, 20 minutes back. And if I'm listening to that on, say, 1.5 speed, I can get a good 50 to 60 minutes worth of time listening to these books. And then here, the second book here that I strongly recommend every single person who really has the likings to be doing this long-term successfully full-time. As you can see, I've actually finished this a few times here. The second book here is What I Learned Losing $1 Million. You are going to learn so much. This book here is a game changer. I promise you. What I Learned Losing $1 Million. It is so good. Because I promise you, when you start to listen to the stories, when you start to listen to like what he was thinking at times, the greed, the fear, what he should have done, all this sort of stuff, it really does. It's really quite amazing process there to learn from there. So if I had to book 3 different books, firstly, this book here is based on my 20 years of experience, but also I've taken the lessons that I've learned from like Jesse Livermore and W.D. Gann and Paul Tudor Jones, and I've put it all into like the art of like what makes a successful trader, understanding the markets more, and so on and so forth. Again, you can get that for free at johnsfreegift.com. And I have no affiliation with these books here, guys. I don't even know these people who actually wrote these books. But as you can see, I've actually finished these books. And yeah, they're just quite amazing here. And so can I do this here? Yeah. Normal thinking leads to normal results. And it's like this title here really rings bell of like its entire markets, why most people don't do well out of trading, right? While normal thinking never wins the game of trading. And this is one thing I find that is one of the hardest things about people who enter this market or enter the markets is they try to do normal thinking, especially when it comes to the fear and greed side of things, right? Like one of the biggest mistakes I'm seeing time and time again with traders is they'll wait for the market to have a big move for a couple months, then they will enter the market. But that's when the worst time is, right? For exceptional results, traders must think differently. This book will guide you and inspire you in ways no other book trading has. It's not about strategies and money management, okay? This one here. Jim Paul's, I can't say that word. Rise took him from a small town in North Kentucky to governor of Chicago Mercantile Exchange. Yet he lost it all. His fortunes, reputation. This book here, guys, it's just so amazing. So anyway, they are the 2 books, guys. They are the 2 books that I strongly recommend If you really want to and again, trade in the markets, there's a lot of people out there that don't do well long-term out of trading. And it's because the way they're thinking about the markets is wrong. And it took me a long time, right? Like I'm not one of these smart guys. To be honest, it takes me a long time to learn things. Like I'm not joking. Like sometimes I'll be watching videos from my mentors, DVDs and so on and so forth in the past, and I'd have to watch it 2 or 3 or 4 or 5 times, but then watch it many times over the space of many months, and then go do it and so on and so forth. So I just find that, again, bottom line is those are 3. johnsfreegift.com. I'm giving this book away for free. It's actually a full book there, which is Inside How to Create a Fearless Trading Psychology. You'll discover the mental frameworks and psychological shifts that give elite traders their missing X factor, the invisible edge that separates consistent winners from emotional gamblers. And that's what I see a lot of people do there. And then obviously, once again, best losers wins, while normal thinking never wins the game of trading. Again, if you really want to be disciplined this year, you want to have a good year this year, right? 2026, I'm doing this recording or this session right now. If you really want to go down that path of doing really well, you need to step up your game, right? Like, let's step up our game, be a bit more committed to, okay, let's actually learn the truth of this. Let's not just be gamblers and try this and try that and try this and try that and do this and do that and test this thing over here. And let's actually bring it down, right? Let's bring it down. So start learning the mental frameworks. I promise you these 2 things here. You're just going to start to give you, if you want to be around the markets in 5 years and 10 years from now. I've been privileged now being part of markets for 2 decades, and I'm still here right now because I'm trying to share with you the things that really helps me. And it's still helping me, by the way. I've only learned these books in the last 12 months, basically. So yeah, that's what I'll see from there, guys, when it comes to the trading books there that I recommend. Now, what I want to do also is let's get into the markets now, guys. Let's actually get into the actual TA side of things. TA. Do. And then we will go from there. So let's do this here right now. So what I want to do right now, guys, is I want to cover all the markets. I'm going to be covering stock market, short-term, long-term, gold, silver, rates, TMF, oil, XLE, Bitcoin, and also Ethereum as well too. And what's happening right now with these markets and what we could expect possibly even over this week. It's always hard. It's always risky to say what's likely to come this week because it's such a short-term thing. And by the way, if you are short-term trading, meaning you're trying to benefit from a trade that's likely to last a day or even a few days, you're missing it's the most hardest form of trading out there. I promise you, especially like times like now where as you know, times like now when we're looking at, say, the stock market and we are just getting this crazy, especially even on the S&P is a bit more better example, and we get this crazy volatility. Short-term trading is eating people alive right now. And this is where having a bit more of it to me, once again, and one of the reason why I push so much of more of a swing trading approach, because I can be long this market on one position and not be chewed up about, which I am. I'm actually long the stock market now and not be chewed up about this volatility here in the markets there. So bit of a FYI for you guys there. So let's actually get into the actual side of things here. Let's start off with the stock market, and then I'll get into gold, silver, rates, TMF, oil, XLE, and then we'll go to Bitcoin and Ethereum from there. So there's 2 things we must also understand, guys, about every single market is we have short-term volatility in the markets. So short-term volatility in the markets is just that short-term volatility, but there's always these big cycles, big trends in place that we need to take care of, and we need to understand what's going on and what's happening from there. So we always need to keep an eye on, I always call it 2 different time frames, not just the one time frame, but 2 time frames. Because one thing I have found, and here's one thing I've found, okay, some people can mix up a short-term drop in the market for an actual top in the market, but that short-term drop is just part of a big picture of a big trend, and then the trend continues, right? And I'm seeing that right now. Now, what I mean by that is this, okay? This here, I'm gonna go to the long picture. I'm gonna go to the big picture here right now, and then I'm gonna come right back down to the short-term picture here, okay? So that's the way I'm going to do it right now. So first, I'm going to go to the real big picture, and then we're going to start to make our way down here. The real big picture here is this. This is a logarithmic chart. There's a few charts that I've shown in the last couple of days, but I want you to understand the concept of what I'm saying here from it, okay? You can see here we've been in a very big bull market through here. And so therefore we know that right now, as we speak, we're in a full-blown bull market, but we have these periods where the market will go down 10, 20% or so sometimes. But that doesn't turn into a full-blown 50% crash. Most of the time, actually through this time, the market's kept going up here. So it's probably going to continue like that until it doesn't. I heard someone saying, yeah, it's going to keep going up until it doesn't. You're right. And that until it doesn't happen that often. So why are you focused on something that doesn't happen that often? Until it doesn't, right? So if you look at this here, you can see here, there's actually no reason why we should be thinking the market's going to start to go through we're going to go through a recession, and we're going to completely go through. Now, yes, we may go through a recession. That doesn't mean the stock market's going to go down 50% now, okay? And when and if that happens and so on, all that sort of stuff. So I want you to be thinking big picture here, okay? So this is the long-term charts, okay? Big long-term charts. So even if we do start to see a bit of a movement on the downside here, and we start to get this bit of a drop to the downside through here, I want you to be aware of what that is in the big picture. Because this here on the monthly chart down through here, what that would look like on the actual daily charts, by the way, if we got to move down to 6,000, this is the monthly charts here, right? The big picture monthly charts. If we got to move down to 6,000 here now, and we actually had a drop here, let's just say we did. Let's say right now, which actually, by the way, I'm long this market here right now. I'm long the S&P. Call options. I've actually got two call options right now. One, I have a big position on the in the money. So I actually went long down the bottom here. Right, so down the bottom here, let me actually take this off the screen. And I'm saying this in the context of what I'm seeing here right now, okay? So I actually went long down the bottom here when I had this big red candle here. I went long call options. I bought in the money options on the SPY. It was actually the SPY, S&P 500 SPY. And so what I did is I bought in the money options, which I'm actually still positive. I'm actually still making money on these trades. Not much. I think about maybe 15, 20% or something like that. That's what they're up right now. And so we can see what's going on there. But then also I took a smaller position, and I took a smaller position way out of the money from here, which is I'm basically risking 100% of that. Anyway, the purpose of me saying what I'm saying through there, right? The purpose of me saying what I'm saying through there when it comes to this here is that I'm actually hoping to see an actual bit of a drop here. Now, again, small picture, if we start the cradle, let's call it cradle here, okay? Let's go here. And we start to have our move down, right? Right now, oh my goodness, the market's topping. Oh my goodness, we're going to go down. And we start to get a movement on the downside. What does that actually even mean? Right? What does that even mean, right? Because here's the thing that I want you to understand, right? And then I got SILJ in my comment section saying, I just want one walker to be wrong, lol. But the thing is, SILJ, is that there's, again, I'm actually, for you guys that are seeing this, the whole thing about this is what, right? We could actually both be right, but what are we actually calling here? I'm not saying there's not going to be any corrections along the way. No, I'm saying the bottom line is, even with a correction, I see a 9,000 target coming. I don't know when though. I'm thinking this year. So what are we calling here? What's Ron Walker calling? Is Ron Walker calling this is the start of a 50% big crash? Or is Ron Walker just saying there's going to be a correction soon? Let's actually look at what we're actually saying here, right? Let's compare apple. But because if Ron Walker is actually saying right now that we are going to get a correction here of 15, 20%, he actually may be right. And I can be right as well too. But what are we doing here right now? You're right, I'm wrong. You're right, I'm wrong. Hey, it's just a position in the markets. I have risk management on these trades, right? I could be wrong. It may not go to 9,000. Heck, this could be the top and the big crash comes, right? Right, wrong. Who cares, right? I'm just giving you my view here. I do believe my view is right. And I do know going with the big trends is like to do that, right? So Here's what I want you to be thinking about here, okay, in the context of everything I've just said here in a minute. If we do start to see a drop to the downside here, Ron Walker was right. I told you, John. Cool. I'm actually hoping to see this drop on the downside. Now, check this out. This is where it gets so cool, okay? I'm actually hoping for this. So, if we do get this movement on the downside here, okay, and we start to move down, it continues down. I'm like, oh my goodness, it starts to drop, and we start to drop, and we start to drop. Let's do this here, okay? And as I said before, if it starts to do this here, right? Oh my goodness, it's falling off a cliff. John, what's going on? Oh my goodness, it's going down. Oh, big red candle. Ooh, right? And it goes, oh my goodness, and it just starts to really, really accelerate on the downside. It just starts. Can that happen? Sure. I'm hoping, by the way. I'm hoping for this, by the way. I'll tell you why in just a minute. Well, actually, a bit of FYI, I just showed you why. Because with this pullback here, that's going to create the ultimate fear is the fuel for upside in the markets. So we can actually get this week, right? Who says we may get this? Now let's look at that scenario there. Let's say the market does go down. Oh my goodness. Oh, the sky is falling. Big drop. Worst week in 50 years. And oh my goodness, it's going to the more. Okay, cool. We're here right now. So the worst mistake that you're going to do is what? You're going to be focusing on here. Oh my goodness, the sky is falling. Oh, John, oh my goodness, this is the start of the big one. Down the bottom here, what's going to be happening? Oh my goodness, the fear ingredient next is going to be pinging extreme fear, which is a buying opportunity, by the way. Now, that's not picking bottoms opportunity. It means it's a good buying opportunity because you're really confident within the next 2, 3, 6 months within that time frame, it's likely to bottom within that, and then it starts to pick back up from there. So I'm hoping for this. Bring it on. I'll buy more call options if that's the case. Bear in mind, I am actually long the market right now, but I'm not oblivious to what could actually come here. Let's get real about what could actually happen. But let's just say that does happen. It doesn't break up. Now, if it doesn't, I hope it doesn't do this because I'm long the market right now, and I hope it holds and we do break above 7,000. Now, once we do break above 7,000, by the way, then that's when it's game over. If we do get that, then it's game over. But let's look at the first case scenario here, right? First situation here. Oh my goodness, it's a bloodbath. Black Tuesday comes, right? All that sort of stuff. So let's just say that happens there, right? Let's just say we go through that process there. We go through all of this here. Boom, 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 boom. What is that in the big picture though? Remember I said small picture, big picture, small picture. This is now what a lot of traders are going to do is what? They're going to be focusing on this here. And they're going to be focusing on this here, right? They're going to be like, oh my goodness. Oh, it is just falling off a cliff. I'll just do that a bit better here, right? Let's do this here so it's more dramatic. Oh no. Right? And it's gone. Zero. We do that. Okay, cool. That's the start of the big crash, right? What's going to happen down the bottom here? If we do get that this week, let's just say it just completely falls off the cliff this week. What's going to happen? Firstly, maximum fear. Buying opportunity. Secondly, what's going to happen? You're going to hear the YouTubers come out and say, this is the start of the big crash. I told you this is coming. Oh my goodness, this is the start of the big crash. The big recession's coming. It's coming. It's coming. It's coming. The headlines, worst drop in 44 years, 0.2. You know, the single largest day in 62 days. You know, the worst week in the last 6,400 weeks. Blah, 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 blah. That's what's going to happen. Now, in that moment, what happens to our brains? Oh, no. Sell everything. Oh my goodness. Sell it all. Sell. Oh my goodness. Oh, it's going down. Quick. Get out. Quick. Sell. Sell all my shares. The market, this is the start of the big one. Quick. Get out. Quick. Oh my goodness, buy put options. I'm going to miss out on the big crash. It's starting. This is the big 80% collapse that's coming. It's the end of the world. And then what ends up happening? 3, 4, 5 months later, we get that. Because why? Because if we go to, what is that? My demonstration didn't work. Let's look at the big picture. What would that be then? And I know this sounds big picture analysis. Weekly chart is going to give you this. Remember, what is a trend? A trend is higher lows, right? So now on the weekly chart, I'll just remove everything from the chart because it's not working for me right now. Thank you, TC2000. But if that did happen, boom, I'm now going to bring on this section here. If we did get that, what would that be? If some reason we had this as a week, oh my goodness, you know, that sort of thing, what I just said there a minute ago. And by the way, this is a template for all markets / how do we think about our trading? What are we going to do in the moments of all that? Because guess what? Every single time we've done that in the past, COVID, 2022 recession fears, tariff situation, it's all the same thing. So I'm actually hoping to get that because that's going to be the fuel for more upside to come. But all this is doing, if we do get, let's look at the if scenarios, right? If we do get that this week, that's what we're seeing here, right? We're seeing this market have a big drop. What is that? That to me is called beautiful because now it's what? Now it's a big drop. It's a 50% retracement. The market went up, came back down, and then guess what ends up happening? Everyone jumps out of everyone jumps out of their screen, throws the phone through the wall because they're leveraged. They're fighting with their wife because they're crankers. They're losing all this money. Stocks are getting crushed. Everything's all over. It's a game over. Oh my goodness. And then those who sell, fear, panic, like they did back here, and so on and so forth. When there's maximum fear in the marketplace, that's where the greatest buying opportunities come. Just look at the last 5 years. Heck, don't even do that. Look at the last 15 years ever since the bottom of 08. Every single time we've had these periods of, oh my goodness, the sky is falling, it just continues. And we're likely to continue that. And the thing is that, as you can see here, you want to be doing, and again, the trend is your friend until the end, right? And this is likely to continue. And the comment that I got once again was, yeah, until it doesn't. That's right. But that until it doesn't happen that often. So why are you focusing on until it doesn't? So I'm doing this here because this is a template for all markets, by the way, guys. All markets, even silver and gold right now. And I'll get to that in just a minute, right? Bit of a template of how I'm thinking about these markets and what to look for and what could possibly be coming up here. Right? So we have all these here. So right, and then we get that through there, right? So that's the first scenario of what I see happening on the S&P. And the same sort of thing applies for the NASDAQ, by the way, because they're both doing the same similar patterns. Now, let's look at scenario situation, other situations. What happens if it doesn't? What happens if this week we don't, right? Trump comes out and says $100 billion. Oh, that's actually not a lot of money these days, is it? $100 trillion, right? That's like $100 billion. It's just crazy, right? It's like $1,000 when I was a kid was a lot of money. Now my kids are just mentioning these billion-dollar things like this like nothing. It's like, did you hear they're actually like $1 billion in debt right now or something like that? But let's just say, for example, look at this here. Beautiful upward trend. It's squeezing up. Maybe this is the correction over. Maybe, right? Let's look at the other scenario. What happens there? Now we're talking game on. What do I mean by that? Because then once we actually clearly break 7,000, guess what's coming? Right? If I squeeze my charts up to here, what do you notice? Look at this here. I'm presenting a trend line at every round number here. So what do you see? 4,000 was an area of major congestion, major support through here, right? Around that area. 5,000 recently. Look at this here. Once it broke this 5,000 level, guess where it eventually went to? It ran to 6,000, right? 6,000, major area of resistance. Right? Now this is big picture. Look at this here, volatility. Oh my goodness, sky's falling. Comes back down. Look where it found support, 5,000. Then what ended up happening? Once we actually clearly broke above 6,000, where did it run to? The next round number, 7,000. Ooh, so if we continue this round number, which I only can go on that. Now, this is just a guesstimate, right? It may or may not. But if we do break 7,000, there's a high probability we're going to run to the next round number because this is all markets do. When we broke 4,000, we eventually ran to just below 5,000. We didn't actually get there. That's this time here. It was just below 4,000. We actually got to basically 4,800, 4,900 basically before it peaked out, but 100 points away from there. And then it came down. When we broke here, when we broke 5,000, now it took time, right? When we broke 5,000, we eventually made our way up to 6,000. When we broke 6,000, we eventually made our way up to 7,000. And at every single of these 5, 6, and 7, there have been major congestions, resistance, and so on and so forth. That's why we're getting a lot of resistance right now at 7,000. And that's why, like for me, I've always said what? I've always said, once we break above 7,000, it's game on. Now you understand why it's game on. Now you understand why it's game on. Because if we do break above there, there's a high probability we're likely to run to the next round number. Now, timing is the question mark. Does it go straight up, like really strong move? So that actually happens within, say, a couple of months? Or does it take its time like this, like it did back here, right? So once we actually clearly broke here to get there, that actually took 9 months for that to happen. I'm more of the camp that it's likely to happen quickly. Why? Because market is a fuel, right? Here, you can see when it actually broke, it ran up here, but it actually pulled back through here. The reason why I pulled back, because we need a resting phase, right? There's the energy phases in these markets. We need time to let these markets refuel and so on and so forth, right? So because we ran up all through here, and I'll bring this up to here. When we broke this resistance, we had no time going sideways. We had no what's called refueling phase. When the market goes sideways through here, it's called refueling. Whenever we get a bit of a pullback, it's like the market's reset and refueling. That's why when we broke up, but then we actually had a bit of a pullback here. Now, that doesn't look like much from there to there, but once again, that there, and this is where it's so interesting about a short-term drop. From there to there was actually just over 1 month of a pullback. So 1 month it actually came down. But what was that doing? That was just refueling to go for the next move. And then it went for the next move. But what's happening right now, though? Right now, we're already doing the massive, we're close to 5 months of doing nothing through here. So we've built up all this energy, this fuel. It's sitting here, resting, refueling, resting, refueling, rest, and then boom! When it breaks, it's like a gun hose. Gun hose? You know when you have two thoughts in your mind and you try to, it's like, you have two thoughts and then you put them in one sentence, gun hose. It's like a gunshot. Or it's like you're putting your finger over the hose. There you go, gun hose. Call it gun hose, right? You know, with the hose and then with the gun. Yeah, that's what I'm expecting if we do get that. So they're the two scenarios. But the bottom line for me is what? If scenario breakup happens, this is probably going to be the start, and we'll get ready for a good, strong few months, because then we're going to start to release all that energy, right? Because when the market goes sideways like it is right now, and this is even the same for the NASDAQ as well too, same thing, the exact same thing for the NASDAQ. Look at this here, sideways. This is resting, refueling for another move. And boy, oh boy, once it actually starts to move, it's going to move really quickly there. Right? And so that's the reason why, once again, this is what I'm looking for there. So once again, 6,000, hit 7,000, once we actually break. And then ultimately I see from an actual big picture perspective, let me actually now bring up my weekly charts here. Weekly chart here, right? And let me see if I can do this here. So actually from an actual big picture weekly chart perspective, when I actually look at this whole big channel that this market's been in right now, the projection of this channel, which is the pattern there, this is where my ultimate target, if I measure from the high to the low of this channel, This is what you do when you see channels and it does break. You measure from the high to low. It's called a channel projected target. Measure from the high to low. You project that out wherever it breaks out. So let's just say it breaks out here. Well, there's a high probability. That's why I've got this other line up here. And then obviously just above that. So that's around the 5,600 level. That's the projected target off the channel. And that's why I've got that. That's why I've got this other line here from the projected target. And obviously, as I said before, if it breaks 8,000, I'm probably going to get 9,000. So this 8,000, 9,000 is a target for me if we start to break out here. And then same for, once again, even on the actual NASDAQ as well too. Once again, same sort of thing, right? We're in this big, beautiful, nice up through here. If we do start to see a bit of a drop here on the NASDAQ, even as again, short-term analysis, let's go here. Last 6 months with the data, last 1 year. If we do start to see a bit of a drop, guys, remember what it is. This is not the major top, and we're going to start to see an 80% crash. The big, massive Donkey Kong. That's right, Donkey Kong. This is just if we do get a bit of a drop here, it is just a little short-term correction. And then the maximum fear is going to hit, extreme fear, the talking heads, everything fear. That's it, game over, fear. Millions and millions and millions of traders are going to get scared. They're going to sell all their shares. Then millions and millions of traders are going to buy put options. And then there's going to be a few percent of people who are smart, just like me, who smart just means I've had experience in the markets. And that extreme fear is a buying opportunity. Just look at the last 5 years. Just look at the last 15 years. It always is, and it's probably likely to continue that way until it doesn't. But I wouldn't be banking on that this time is not until it doesn't. We have a lot more way to go from there. So if we do get a little freak out here, stay calm. Oh my goodness, market's down 3%, big drop. Stay calm. Be not fear, greed, center. See what's going on. Okay, what's going on? Big chart, weekly chart. What's this here? Oh, okay, cool. It's going up. All right. Okay, cool. All right. Here we go. Here, weekly chart. And if I just I'll bring on just this one here. And all that's going to be what? If we do get a drop, what's going to be? Big move up. If we get a correction here on the NASDAQ, that's just a nice 50% retracement. What's a 50% retracement? Higher lows, right? A big, beautiful bull market is higher lows, 50% retracement. Here we go. So if we do get this drop here, don't freak out. It's not the top. Big, beautiful trend still. And then boom, away we go again. And just like most people have done for the last 15 years, and by the way, the last 15 years, I've been part of that freaking out on some of those times. That's why I'm telling you right now, the last 20 years of experience, and now seeing this time and time again, I'm like, I can see where this simpy guy was getting it wrong as well too. Now I take advantage. Now I'm much more smarter. Smart just comes from experience, and experience it comes from bad judgment. Bad judgment means I was doing that shit as well too. Now I understand what's going on there. So that's what's going on there on the actual stock market here, on the actual, even on the NASDAQ from here as well too. Let's go look at the actual Russell here. Russell is actually really, really awesome. Russell is in a big, beautiful upward trend. It is probably one of the most beautiful ones, BEA beautiful with the Russell, than any other market out there. Well, now, should I say, all the indices out there, right? S&P, volatile, sideways. Where's it going to go? Top, bottom, boom, bust. What's going on? Russell, Russell, look at this here. Beautiful trend. And even from a short-term analysis, right? Here, look at this here. Boom, higher low. And then there's another boom, higher low. And then there's another boom, higher low. But also, remember I said before about 50% retracements. Let's go to this here. Look at this here. Here we go. Strong move up. Up. Oh. This drop here, just like I talked about on the S&P 500 and the NASDAQ. If we do get a drop, it's not game over. It's just part of the trend. Market has to come down to form a higher low. Just remember that, guys, right? Just remember that. A drop in the market is not the game over. And again, technical analysis, and most people understand this, but most people don't get this. Technical analysis 101 is higher lows and higher highs and upward trend. No, John, tell me something new. Okay, so when the market does drop, and if it does happen over the next couple of weeks in the S&P and the NASDAQ, don't freak out because it's coming down to form the higher low. But John, what if it's not? Shut up. Stop listening to your fear right now. Look at the market. The market's telling you what's going on. It's like, whoa, don't. Let's bring it back, right? Beautiful. Look at this here. Less than 50%, strong trend. Right. And then away we go again. Then it had another leg up from here, from the low to bottom. This one actually got 50, came all the way down to 60% once, but holding 50. Beautiful, beautiful, beautiful. So what's happening here? So I ultimately see I've actually got a target now. Now squeezing right out. Look at this here. It's just broken out of this phase through here. So for me, my target, let's do that, is up around the 3,000 actually on the Russell. So 3,000 on the Russell or 300 on the IWM. That's my target of where I see things going from there. Let's go look at the Dow Jones. Right now, the Dow Jones is actually in a pretty cool place to be. Where I see this going on a bit of a shorter term level, if I bring this chart up from this perspective here, right there we go there. If I look at this big picture analysis from here, we've been in this very big upward movement from here. Okay, it's very steep, by the way, very 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 steep on the Dow Jones, and so I'm actually ultimately seeing we're likely to run to the top of the channel, just like all markets like to do. When you have these channels, they like to run to tops and bottoms of the channels. So we're probably going to run to the top of the channel up here. Now, this is a weekly chart. How that forms, like it could go down for a few weeks and then make its way up to the top of the channel, but that's where I ultimately see this thing going over the next couple of months. Now, if it does end up breaking, if we go back to what's actually going here on the daily charts now and zoom right in on the daily charts, that means if we hold here and we continue up, then we're likely to start to make our way up to this top of this channel up here. Now, here's the really interesting thing, right? Here's the really interesting and awesome thing here is that, once again, same for the channel projected target, right? Because if we continue breaking up here and it's strong, then that's where we start to bring on the long-term weekly charts here. And that means that if it does start to break up, we could be getting ready for a 65,000 Dow. If this thing really gets underway and we really get heated up here and we start to really make a move, once we break above this level here, then the target for the Dow Jones is indeed around that 65,000 level there. So there's a lot of really big moves that's happening from there. And when it comes to the stock market, and just keep an eye on this big picture, small picture, big picture, small picture. Once again, just to recap here, this section here is that even if we do get a drop on the downside, remember, it is not game over. It is actually good. It's actually part of a trend. It's a part of a big movement from here. And especially on the things like the NASDAQ and the Russell, if the NASDAQ does start to drop here, it's not game over. It's actually pretty much still game on, right? We're probably likely to come down, create another nice little high low. And then the big picture, I have a 34,000 target on there. So either way, we break up above the 26, just like the S&P above 7,000. Then we make our way up to 34,000, or we come back down, and that happens over the next couple of weeks, basically through the rest of February. And then I see March, April, May, June, boom, 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 boom. So the end of the story is drop 34,000, break 34,000. So bottom line, I see 34,000. From there. So that's what I'm seeing there right now, guys, around the actual stock market from there. Now, let me go into deep detail about what I'm seeing around gold and silver from here. And we'll go there. We'll go down that path from there. And let me bring this up to here. Can you look at the Dow Jones? There we go. If there was a correction, whereabouts do you think? Again, a 50% retracement on that big picture there, Abdul. I hope that makes sense. I don't think we will break that last low. No, I think so as well too. If you're talking at this low here, this low right here, like say for example on the NASDAQ, that's that last low there. Again, this is a big picture weekly chart, right? Look at this here, beautiful. Now up, break down, just another higher low, because that's what trend is, right? Higher lows. When the market comes down, it's just forming the higher low, and then away it goes again. So yeah, so falling to 61.66 shall be the best. Top, mate. I agree. Even though I'm long the market right now, I 100% agree. Bring it on. Bring it on. Oh yeah, S&P 500. Abdul, yeah, S&P 500. Yeah, same thing, right? Same thing. I don't believe we're going to break past that low from there. This is just too strong of a market right now. And there's so much, if you talk about the fundamentals of these markets, there's so much wind behind these markets here, right? Printing money, lower interest rates. But John, the dollar's getting devalued, higher equities. John, what happens if they default on their debt? Higher rates, higher stock market. If they default on their debt, and that happens now, just say they do. Trump says, okay, we default. It's going to send the stock market higher. Lower dollar is going to then equal higher prices in equities. There is so much headwind for the upside, guys. So much headwind for the upside. If you're looking at the fundamental macro behind the whole equity market. So even if we do get a drop, and that can happen, right? Just remember and keep that in mind. Alrighty. Maybe it'll come back and fill the old gap. Yeah, on the speed. Yeah, thing is earnings and economy of us will drive markets higher this year, no matter what. Small corrections. Yeah, I just think we're in a massive, big, strong bull market here, and it's probably likely to continue for a lot longer than what we think. And I would just say stick with, the trend for the last 5 years, keep it that simple, has been the biggest moves have been going with the trend, and that's been up. And trying to trade these short-term corrections, you have been having a hard time. In fact, you've blown up many trading accounts trying to pick the tops, even trying to short the market right now. You may be right, you may be wrong. But the big problem with that is if you short the market right now and you get it right, it's going to be really, really, really dangerous from there. Anyway, let me now get into the so what I want to talk about right now, guys, is gold, silver, and the mining sector. I want to really dig deep into these sectors here and what's really going on now with gold, silver, and the mining sector here, and just see what's really going on and what's coming up for this sector here. Now, let's actually step back for a minute here and let's look at the lessons we can learn from this market so we can then adapt it for the rest of our life, so we can actually learn to be better traders, not just like next thing. Stop. Let's go back over the last couple of months and let's see if we can learn some things so we can keep this in mind. So next time this happens, we can be alert and actually be smart about it and not get trapped into that there, okay? Let's look at silver here for a minute, okay? Silver had a really big move. This is a daily chart, right? And as you can see, when I squeeze my charts up like this here and I get a couple of years worth of data, I get the true scale of what actually happened here. We've gone sideways here for nothing, for basically 2 years, or actually a year and a half, as you can see, right? And then suddenly what happens, we had a nice move up from here, nice, beautiful move up from here, and then we're in sideways. Now, this is what I want you to, this is the lessons we can learn from silver here, okay? And whenever we see, no matter what market you look at, if you can bring up a chart that looks like this, meaning squeeze it up a little bit more. If you zoom right in, all you're going to see is you're going to just see this thing here, right? You're not going to be able to see the scale of, is this a bubble, right? Because all bubbles have the same characteristics of whenever we do get a significant, real big crash in something, or a big downturn, it comes from bubble territory, right? Especially in things like silver. But let's look at this here. Whenever we see a chart that looks like this here, let's actually look at a few things that was actually happening at the time. Firstly, as this was riding up, you're going to get the herd mentality saying what? This time's different, the great reset's happening, etc., etc. Like, this is why it's happening, John. It's never going to go down. You don't understand. Like, you're going to hear that. And then, John, you don't understand. Silver's going to 200 right now. It's just going to keep going up. It's never going to go down. Central banks are buying. How can it go down? It's like you're going to hear a lot of that noise there, right? And then the big projections come out and so on and so forth. That's what you're going to hear. Now, this is where it gets hard for most traders who trade the markets, because when they hear this overwhelming noise around something, you get sucked into the, oh my goodness, I'm missing out. I better, it's the, boom, and you go. And not only do you go, but you leverage up and you have big risk on your account because all you're thinking about is this is the start of the big one and I better get into it to make millions of dollars right now. And what ends up happening most of the time, it does a big donut on your face. Me being polite here, by the way. Right? Because that's what bubbles do, right? Bubbles in markets. And this is where no matter what market you're a part of, be very wary of the noise in the markets. Like what's really going on here? And only a few percent of traders actually end up getting to that point where you can just step back and say, man, there's so much bullishness around these markets here right now. Be very wary when that happens, right? Because then the market does what it does here. So the first thing we're going to see is what a bubble looks like on the chart. Look at the chart. Charts, yes, charts are the king. Whenever something goes vertical like that, 99% of the time, you're going to get what? A good correction off it. Because when something goes strong like that, this is not a bull market anymore. This is now called a bubble, right? In every single major crash in history we've seen, like a real big crash, it's because the market was too high in the first place. For something to crash, especially fast and hard, for something to crash, it had to be high in the first place. Think about life in general. Because remember, the market is an energy field, right? It's an energy source. And if we get too high and we've used up too much energy and we keep pushing it and pushing it and pushing it and caffeine and pushing it, just like our lives, what ends up happening? We end up, getting a big crash. The terminology crash comes from something being too high. We've pushed it too far. That's how crashes happen. They don't crash from out of nowhere. And then when that too high is actually happening, when that too high is actually going on, that's when the too high noise starts to form as well. So let's start to look at this here. What can we learn about this over here so you don't get trapped next time, but also understand the psychology of markets so you can start to understand how to navigate these markets properly. And for me, I shorted silver. I actually shorted silver on, for me, I shorted on the SLV here. And what made me short it was, there's a big thing whenever we do get these big bubbles and we get a big volume spike, as you can see here, this big, if you see that big volume spike there, whenever we get volume spikes like that, after markets make a big move for a few months, and that was around about there. That's this big volume spike, massive tower volume spike after it's got up like that. That to me, that's an exhaustion volume. The volume is giving you a clue that, we've been going straight up for many months and then we get a big volume spike. Massive probability that's an exhaustion volume. And then look what happened a few days later. That's when I actually bought my put options, by the way. I bought put options there. And then I didn't expect this to happen straight away. Right? I thought it was going to happen a few weeks and then the drop there. And then that's because I've seen this thing so many times here, right? Big bubble in the first place. And then a crazy volume spike after it's already got a big move up. We're too high. Exhaustion volume. That's what that volume is there. That volume here is not let's get going volume. That's like, okay, I'm giving you the whisper right now, right? So I also use this for exit strategies just on my normal trades. So if I'm in a trade and the market's going up and up and up and up, and I've been in it for 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, and then suddenly I start to get this big volume increase, high probability that that's now going to be the top of that move. Not the top in the market, but top of that move. And then suddenly we start to get the big drop down and the way we go from there. Okay. So, just a bit of FYI from there when it comes down to what I did and why I did it. Right. So let's go back to silver here for a minute. Okay. So remember, for something to crash, it must be high. A market doesn't crash when it's not too high and there's not a lot of sentiment around there. I want you to think about these markets here for a minute. Okay. Think about obviously 1929. Let's actually go to here. I'm trying to bring up crashes here to show you, right? 1929, look at this here. Why did 1929 have the biggest crash in history? Why did we have this here? Look at this move here. right? And if we're going to then squeeze it up to actually get the proper scale, now we're talking about a monthly chart here, by the way, guys. This is a monthly chart. Look at this thing, just up and up and up. This is talking years now. Look at this thing, boom, 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 to the moon, to the moon. So if something just keeps going and going and going and going, that's no longer a bull market. That's now called bubbles. And if the market, the chart is giving you a warning sign of don't get involved with this. Now, the herd mentality is going to be thinking what? The herd mentality is going to be thinking, oh my goodness, I'm missing out. And then this is when the party starts, right? The headlines, the news, the retail trader, it's easy money. Let's go, let's go, let's go, let's go, let's go. That's the noise you're going to hear. And because most retail traders don't understand the nature of what that actually really means, it doesn't mean go, it means stop. People making ridiculous projections and hearing all these people make money and it's easy, the market only keeps going up and the party times and you're missing out and it's never going to go down and this time's different and on we go. It's the same. That, oh my goodness, greed, it's not a sign to say let's go, it's saying let's stop. Because there's a high probability we're about to see. Now you could never predict this here, but you're probably going to start to say, okay, we're about to see some significant movement. Now, this is a big monthly chart here, by the way, right? When was the next really big crash? 1987. Why did 1987 do what 1987 did? Let's look at this here. Let me take everything off the screen here. Again, this is a monthly chart here, by the way. I'm trying to compare apples to apples. Look at this here. This here, look at that. This here is what? 1987. This here is now years. We broke out of the lost decade, which is coming in 2030. So I see this lost decade. I believe that's coming in the early 2030s, right? But check this out here, right? How do we spot a bubble? The bubble gives us a representation of a chart. Most things that, remember, for something to crash, it had to be too high in the first place. A crash doesn't just come out of nowhere. A crash in life, because remember, the market is like an energy source. If we go up, we're using a lot of energy. When the market goes sideways, it's starting to build energy. So if you understand that, that's why gold had a big 2-year bull market so far, because from 2020 to 2023, it did nothing. And then it broke out, had all that energy, and then it had a big move. But why did we get this big crash in 1987? Look at this chart. It just kept going up and up and up. Now, this is monthly charts, right? This is 84, 85, 86. Now, yes, you get your period of sideways consolidation, which FYI, right now, this here is exactly what the NASDAQ looks like, by the way. So, yes, if we do get that big move up coming, what I see in the S&P, 9,000 NASDAQ, and we don't get a correction now, yeah, be warning of a big drop coming on the other side of that, right? Because now what? Now, yes, we're getting the same bubble territory. And then it has a big move up there. This move up was what? Just straight up. Remember, the market is an energy source. And if we're moving up, 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 without any, even a little bit of a correction to start the refuel and reset, when the market's moving up, it's using energy. We're using energy, we're using energy, we're using energy, right? That, remember, it's an energy source. And that's like you going and you working out. You're doing a workout, but then the next day you come out and do another big workout, and then you caffeine, and then you push it harder, and then you take a big stimulus pre-workout, right? And then even though you're exhausted and you're sore, then you take a massive big 300, 400 milligram caffeine pre-workout, and you go for another big workout. And what ends up happening when you do that? For you guys that train or have trained when, if you're a bit older, but you train when you're younger, you know what ends up happening, right? I'm a trainer, right? I train right now. I'm a trader and also I train. We end up getting what? This here is the 1987 crash here, right? From there to there was the 1987 crash, which was down 40% in 1 month. But then, as you know, what was that on the big picture? It was just coming back down to equilibrium. and then we continue back up again from there. So this is the 1987 crash. So I'll go back to then now. Let's go back to the actual gold and silver here. This is the lessons we can learn from gold and silver right now. That no matter what market you are looking at, no matter what chart you are looking at, guess what? We can get a warning sign of when something's becoming too bubbly. Too bubbly. There is strong trends. Nice move up, right? Even with gold, right? This here, back here. Look at this here. Beautiful. Up for a few months, sideways a few months. This is what's called beautiful trends, right? Up, sideways, right? And then up, sideways, up, and now through here. Whenever we start to go too vertical on a chart, then that's the warning sign of a bubble there, okay? So right now, on a bit more shorter term TA, on the actual gold and silver here, it looks like to me that silver wants to have a bit more of a move down to come back down to just where it, generally wherever these big bubbles start, they like to retrace here. Looks like that. So that's what silver's like, what wants to do anyway. So I would say silver's likely to continue down around about that 70 level, maybe even 65 level, and then we may get another bounce from here. Just looking at that level there, I think we need a bit more completion here. This could be a massive head and shoulder formation. Again, it's a reversal pattern. I think the trend is going to continue more, but we just need to come back down through there when looking at the silver chart from there. So if we go back down now to the actual gold chart here, now looking at the actual gold chart itself, actually, you know what? Let's do this here. So I'll bring up the silver, but let's actually bring on the silver big long-term charts here. Let's go. In fact, I'll bring on the monthly chart here. So I do believe that we've actually now made a new base. So that's actually that last high up there. So yeah, just trying to see where that is. Yeah. I just, again, this is even looking at this month, is this weekly chart, as you can see, right? It ran up, came down, ran up, it's coming back down. So I wouldn't be too surprised looking at this chart here that even if we did have a bit of a short-term drop from here, we actually had another down week from here, and we actually came down to here. I wouldn't be too surprised if that happened to then start to see something like this overall, and then we start to make our way back up again because the trend's really strong through here, right? It's a strong trend. Just this part here became too bubbly within the trend. It came back down. It's now starting to reset. We've got the crash. We're resting for a little bit, letting our energy source rebuild again. And then now we're getting this beautiful up, down, higher, low on this weekly chart. It had a really big move to the upside, too bubble, too far, too much, too fast. We're likely to crash. We did crash. We've actually come back down. Now we're balancing it out again. We did get the crash. We're refueling a little bit more. Maybe another move to the downside down here would be bring it back to a nice big balancing of that trend line. And then that may be that may be a time for us to then see another big leg to the upside because we're in a big, beautiful trend here. And this is the same for even like looking at the stock market here, right? If I look at the actual stock market and I bring up, say, for example, the daily charts here, and we go down to and we go down to the shorter time frames here. This is this last 6 months or so worth of time frame here on, say, gold. Is it going to work for me? Come on now, work for me. Right, so this is actually the gold chart here. So gold's actually still in a big, beautiful upward trend. As you can see here, right, when something just gets too far away, that's when so this drop here, this big crash, wasn't the start of something more. The crash is over. The crash is done. That's why I exited my silver position, right? So if you look at my trade and I look at my silver trade, I shorted it up here. That's why I went short up here. And as soon as we got the crash down here, that's when I exited because I knew that's all it was. It was just a crash that was likely to come. And then now we're probably going to continue up from here. We might get a little bit more of a drop, but then looks like we may get another leg to the upside soon from there. So it's not, for me, when I'm doing things like this level here, that's the understanding there. So looking at this level here from the actual gold chart, this is still very bullish. Nothing wrong with this. Look at this trend line here, right? Beautiful, up, down, bouncing, high, low. Nice little high, low. Nice little high, low. Up, 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 up. Oh, look at this here. Look at this bit through here. Look how far we're getting from here, right? This is now what? So far extended. Look at this here. Beautiful, nice, good, trending, up, down, up, down, up, down. Beautiful high lows, right? through this trend here. Then what ended up happening? Look at this here. Look how far away. Look at this here. Look how far we actually got from there, right? We got that, and then we had a really strong move, as you can see. This one here is what? So much vertical, right? So much vertical than this one here, right? We're just nice trending up, slowly going up, beautiful upward trend. Look at this here, beautiful upward trend, not too far, nice move up, come down, high, low, move up, come down, high, low, move up, come down, high, low, move up, no high, low, move up, move up, move up, move up, move up, move up, crash. And then that's what we needed, right? Now we've got the crash here with gold. That's what we needed, right? We needed the crash just to come back down, right? Let's actually get back. Let's actually get back to equilibrium. Now we did do that. All that did was what? Come back down to the trend line, as you can see. And now that's where we bounced off, right? And now we're just bouncing off, and now we're just holding through here. So to me, on the short term, in the last, say, 3 to 6 months, this whole big drop in gold was just that. Was just the gold. Now this is the real big long-term picture, guys, is this here. This is a weekly chart, right? This is the weekly chart. We typically only last, let me actually bring on the GLD here so you can see this here, right? Whenever we go through these big bull phases, firstly, remember what I said about crashes and bull markets and bubbles and so on and so forth. This is also what we're seeing right now on the long. Now, this is big long-term picture, right? We see that through there. Or let me bring on a bit more of what's called a logarithmic chart, right? So we can see it a bit more. Look at this here. So whenever we go through these massive bull phases, this is why short-term gold right now is what? Let's go back to the daily chart here. Where's my daily chart? Come on now. Be nice. Short-term, this is what's happening here, right? So short-term, nice upward trend. We came down, found support. We're bouncing up through here. And we actually, look at this here. We come up, come back down, small little high low from here. So we had that low point from there, which is actually holding that trend line really nicely. You can see it came down and moved back up. Then we actually had found another little bit of support through there. And so far anyway, we're actually finding a little support through here. So beautiful, right? beautiful. So we're in this big upward trend still. So if we break through here, we're probably going to make another new high. And if that happens, we're probably going to, I say at least 6,000. 6,000 is a nice little round number there, right? Of where we could get to, probably even higher, so on and so forth. But keep in mind, once again, this is the small picture. What's happening, what can happen over the next couple of weeks to a couple of months, right? But just remember where we are in the big picture analysis here, right? And once again, let me go back to the weekly chart here so you can see it once again. Right, and then I'll take all these arrows off right now. Right, from there. Or actually, I'll take everything off the screen. And let me bring on the GLD because you get more data. Whenever we go through these big bull phases, just remember where we're at right now with gold, right? We've been in this really strong bull market for 2 years. So even if we do rally and we have this another move from here and we start to move up to here, this here right now is not the start of now a move to 10,000, right? We're getting towards this big, massive bull market. Just what I said before, all charts work the same way. And so because gold itself, this is the gold monthly chart here, and I bring this up to here, because all markets work the same way, you can see what happened back here, right? Look at this here. We actually broke, and when we went through a big, strong bull market from here, so that was a bullish phase from there, as you can see. So whenever we go through these big bull phases, it does stop, and we do either see a good correction or what's called a sideways phase. When it broke that level from here, right? So when it broke this level here, it went for a good 2 year, roughly, was that 2 years? Yeah, roughly around a 2 year bull market. But then guess what ended up happening? This time what? We just went sideways for a year or two, right? And then we actually ended up getting a drop down to here. Then what? Then we had the next big bull phase was right through here. Right, so this here was the big bull phase here. That was roughly what? Roughly around 2 years, right, around 2 years or so. But then guess what happened? We went through a resting phase. So just like the big picture analysis now on gold, just remember when it comes to the gold market is the same thing. We have been crazy in a really big, strong bull market now for 2 years. It's not going to continue, and that's just do this, right? What we would need to see is just like everything that we've talked about today, is that we're probably likely to see another one of these guys going on soon. Now, it could be sideways, or we may even get like a nice 50% correction out of it. Doesn't mean the bull market's over. In fact, that would actually be healthy to then see a 10,000 gold coming. And so, because as you can see, this is what markets do, right? Look at this here in history. Look at everything in charts. This big long-term monthly chart won't just keep going up and up and up and up and up. We will get these periods, even in a big long-term bull market, strong bull market, right? We get these periods of really expansion phases for a couple of years. And then after that, we go through a year or so of this one here, which is sideways, but also this here doesn't look like much because it's a monthly chart. But when you start to look at, say, the actual daily charts itself, let me bring on the actual gold chart so we can get a bit more data. This is when you start to get some really crazy volatility, right? Because this here is the actual chart itself. And so what ends up happening within these periods is you get some crazy volatility, right? So this here is that monthly, this big sideways here is that monthly, then starting to go through it sideways. It's got these downtrends up through here, uptrends, downtrends, but the big picture is then this is just opting on sideways before we get there, right? So just keep that in mind when it comes to gold. That if you're looking for, I'm a long-term really bull on gold. But we're probably likely to get ready for a good 1 to 2 years of a pullback, or even just one of these nice sideways phases where you're still going to get a good correction, right? You're still going to get a big drop. So it may rally up from here to here, and then we have another big drop of, say, 20%, maybe 30%, and then it rallies again, and then doesn't do much from there when it comes to this gold chart. But on the short-term analysis here, looking at this gold chart from here, let's go back to, boom, daily charts. This is what I see happening right now. And ultimately on the next, say, that's obviously what we're talking about today. What could be coming up this week? We could be getting ready for another move up. If we do get that, just understand where we're at right now. A quick look at the actual mining sector as well too. Look in the actual mining sector here right now. Look at this here. Same thing, right? Big, beautiful, bouncing, just nicely bouncing, come back up, bouncing, holding through here. Now, a few things that I'm seeing with the mining sector. Firstly, this nice, good trending environment is probably likely to continue for now. But here's the thing though. If for some reason the mining sector starts to break below here, that's going to create a lower high. And then we start to break down to here. If we do get something like this going on, and we get that going on in the actual mining sector, if we do get that, then we're probably, the GDX is probably likely to get down to around the $70 level there. This is going to be the start of a much more significant drop coming in the markets. We're not there yet. This is just a pullback in this nice, good bull trend for the last 3 months. Nice, come back down, high, low, come down, drop, high, lows, and away we go. So we can see that through there. So what's likely to happen if we do get that nice big drop? And this is the same for all mining stocks. Now, so far we're not there yet, so we can't bake on that. Nice, good upward trend. I'm going to stick with the trend here. We're likely to continue. If we do break up above these highs up here, right, we're likely to see, if we do break up like that, then we're likely to see another really nice strong leg coming up from there out of the mining sector to continue this nice, good trend here. So nice little break up above short term. We're likely to see a move to the upside from there. Beautiful, beautiful there. GDXJ, again, all these are the same pattern. Nice, good upward trend. But if we break down, we're probably likely to come back down to around the 115 level there. The SIL, all these are the same patterns, what I just mentioned on the GDX here, so I'm not going to continue to repeat myself. But down, up, once again, break. SIL, if it does break around that $80 level, looks like there's that long-term trend line coming in, so around about that $80 level or so, 80, 85 level, somewhere there. Looks like a level there. And then the SILJ, again, that's all the same thing from there when it comes down to there. So that's a bit of a detailed update on what I'm seeing now with the gold, silver, and the mining sector. But I also wanted to give you the warning signs, the lessons that we all can learn instead of us just continuing on what's next. Let's stop. Let's go back. Let's see how we can learn the lessons, because this is what the markets do. And only fools will just keep moving forward and not look back to learn the lessons. Because when we look back to learn the lessons, we can move forward with clarity and confidence and lessons to help us actually not help us get stuck and sucked into the mania, but the lessons by looking back, like we did just then in today's session, in this section here, what we did is now moving forward, we can keep alert on this, because when the warning bells start to go off of this has gone up a lot, and the noise and so on and so forth, that's a warning sign to not get involved with it. And then when you do that, that's how you start to become a much more well-rounded, balanced, good trader in the markets there. Oh my goodness. Let's go to here. Wow. I'm going to take a 1 minute toilet break, guys, and then I'm going to start to get into the other markets here. I'm going to get into rates and TLT, TMF. We're going to start to get into oil, XLE, and we're getting into Bitcoin here. As you can see, a lot of this stuff's really diving big into the TA stuff. And Adam says, I upped by getting into sleep a few days ago. Sleep. What is sleep? Let me have a quick look at that, and then I'm going to do a bit of it. Well, Adam, mate, what can we learn from this, right? Look at this here. When the market has a move up for a while, for a week, or even a month, if it's already moved up for a month, guess what? You know what? There's going to be some sort of a correction coming, some sort of a pullback. So if the market's already moved up a lot, actually a few days ago. Okay. Well, Adam, it's the same thing though, right? It's the same thing, right? I'm trying to teach you a well-round why this actually happens, right, Adam? When the market has already moved up quite a bit over the course of a month or so, and it's all just been straight up, markets go through phases. So if that's already been happening on the chart you're looking at, you know there's going to be a bit of a pullback soon, because that's what markets do, right? As you can see, even from this actual sleep chart. You said sleep, so I just brought up this. I have no idea what this chart is. This is SNBR, no idea, but it's actually a perfect example, right? And the same thing for you, Adam, right? Where you said you effed up. Why did you F up? You effed up because you saw this market going, and you just want the FOMO kicked in. You want to get involved with it. Just remember, every market works like this. Remember this: if the market's been going up just like this level here, or even XLE, and I'm going to bit of toilet break. I'll use XLE for an example. All markets do this, right? When the market goes up, especially like this level here, that's been going up strongly now for the last, say, month or so. What do markets do? They go up for a while and then they pull back. They go up for a while, then they pull back. So if the market's been going strongly like XLE has for the last month and a half, especially even 2 months, it's already gone too far. That's the worst time to get involved with that. It's the worst time to buy it. Why? Because you know there's going to be what? A pullback soon. And that pullback is what? Just to create the higher low. And then away we go. So the worst time to buy something is after it's already made a big move. If you didn't buy XLE down the bottom here, it's the worst time to buy it here. Why? Because when the market does have its pullback, and we will, because that's what big bull markets do, right? Look at this here. Here, move up, down, pullback, up, down, pullback, up, down, pullback, up. That's what markets do, right? This is how markets work. So in the thick of it, when the market's making a big move here, going up, you know there's going to be a drop soon, because that's what a big bull market is. It goes up for a while, then we get the pullback, higher low. As the market's coming down, it's not the top, it's just creating a higher low, and then away we go again. So that's where you effed up, Adam, right? You effed up because you obviously started getting into FOMO. You probably heard me talk about this last year. You're like, oh, whatever, this guy has no idea what he was talking about. And then the market did do this. And then now, like, oh, shit, it's really happening. I'm missing out. I better get in now. It's like, not too late. Let the market pull back. The best thing to do is wait for a good pullback first. Ideally, if you really want to get into XLE, wait for a good pullback first. And then if we can get if we can get a big pullback down towards the 50 level, that's a much better buy point than where it is right now. Why? Because we know we're going to get a bit of a correction here soon. Anyway, that's a bit of coaching advice for you guys. I'm going to get into rates now in just a minute. Just a bit of toilet break, guys. I'll be back in a minute. Right. Let's get into rates now. Rates, TLT, TMF. Let's get into this section of how cool is this, eh? Hey, raising the house. Raising the house. Raising the house. Alrighty. So, man, what a live stream, eh? What a live stream. Make sure I'm on. You know what? Let me start doing this. Let there be a bit more light. Okay? Make sure I do this as well too. There we go. There we go. That's better. Alrighty, guys. Let's get into the next section, eh? Next section. Session? Next section. Next section. Alrighty, let's go. Alrighty, traders. So let's actually get into this session here, which is rates and what I believe is one of the greatest opportunities, the highest probability opportunities, not certainty, but one of the greatest, highest probability opportunities I see in 2026. And it's already starting, I believe, right? Now, that doesn't mean you go out there and load the house on it. Just like every smart investor and trader, no matter what looks good, how it looks good, what you think is going to happen, there is a risk to everything you do. So risk protection is first, right? No loading the boat and so on and so forth. Anyway, so let's actually check this out here, right? Let's check this out here. So I honestly believe this is one of the greatest, this is one of the highest probability trades and investments that I've got going on right now myself, okay? Again, this is not a recommendation for you to do this. I'm telling you what I'm doing and what I have done, and I can actually be wrong and lose money on this. Everything you hear on YouTube, put it with a grain of salt. I'm just giving you my opinion on what I'm doing, but I'm definitely not. What is that? Oh, yeah, I'm definitely not telling you guys what to do. And also remember, when I have positions, which I do in this situation, it's also a small portion or a portion of my investment and trading accounts. All right. So therefore, it's risk. It's not 100% of my account. It's a small portion of that. Now I have a good size of trading investment account when it comes to options and so on and so forth. Anyway, just so you understand that. But I also see it's one of the most highest probability opportunities out there. So I need to make sure I'm protecting my downside, which I have. But then if it does work out, that's when I can start to grow my account quite nicely from there. So let's look at this here. So firstly, rates. I have seen rates being in a big, massive topping pattern, right? Look at this here. So if we look at the last, this is the week here. If we look at the last week, this is what the rates have been doing here so far. Now, this here is a big, massive topping pattern, I believe. And I've always seen this as a topping pattern before we go through a bit of a dropping cycle. Now, one thing I want you to understand is what I believe happening in the real big picture of what's happening with the rates and the bond market and where I see this thing going. Okay. Now, firstly, the big long-term picture with these rates. Let's actually start off with it. Let me go back down to the monthly chart here. I want to share with you what I see. I see that this breakout here since 2020 has completely started a massive shift moving forward for the rest of our lives. For the rest of our living lives, we have now just started a massive shift. But that shift takes time, right? What am I saying through here? Charts are really good representation on what is going on and what's coming up, right? Even on a rates situation, we can get a good understanding of what's going on. But this is where, like, I really want to encourage you, no matter what you're doing, look at the big picture, right? I'm showing the big monthly chart to show you where we are in the big monthly chart. And this big monthly chart helps me see the opportunity now for the next, say, year or two, and then what I see next. Now, what am I talking about here, right? This big long-term monthly chart, we can see that this has been, we go through cycles, right? There's been massive cycles of play. We had this big, strong, long-term upward move from here in the 60s, in the 70s, and the 80s, and so on and so forth. And that was a big bullish phase. And even the interest rates makes higher lows as well too, which is quite cool. Good trend analysis for you on the interest rates there. But then guess what? And then we start to see what? Then we actually start to see with the interest rates, we start to see a changing of tides, right? So we've been in an environment since basically the 80s, or actually, yeah, since the 80s, where we've been in what? A down trending environment where it's made lower high, lower high, lower high, lower high. I know that sounds pretty crazy, right? We're doing technical analysis of interest rates, but it actually works. Look at this here. We've been in this big downward trend. So it's just human nature. That's why trend analysis is so powerful in every single market here. But looking at the big picture though, right? Looking at the big picture. So if we see what's going on here, we can see that what? We can see that this whole big down phase through here, which really was like channeling, neither here or there, who gives a shit? But big downtrend from here. Now, what does that mean? That means now we can see that since the 80s, we were in a type of phase, a type of living environment. This is what we're living through. We're living through lower interest rates and lower interest rates and lower interest rates and lower interest rates. Why is this important now? What is this here? Right? There we go there, right? What is this here? Or actually, I'll bring this over to here. What is this here right now? Right? This point right here, as we speak, right here, is telling us since the 2020, this to me, right here on the big picture, that's a final massive bottom. The bottom of this multi-decade bear market in interest rates. We have now changed the tune. And for the rest of our life, it's going to look completely different. It's not going to be lower interest rates and lower interest rates and lower interest rates. Now, this here, by the way, guys, just FYI, just so you can see what we're looking at here, all right? FYI, I'm using my TC2000 platform to talk with you through this, right? So my TC2000 platform is TNX-X. This is the 10-year. How we do it is this. See, it says 40.56 here. That 40.56 there, the way we do it in the TC2000 is you put the decimal point between the first two numbers. So right now, 40, you would say right now, right, that the interest rates, the 10-year is what? 4.05, right? That's what the interest rates is right now in the 10-year. So you put the decimal point between the 4. So the 40, the decimal points between the 4, so 4.05, and that's how it works, right? So I'm just letting you know that's how the interest rates, that's what you do on the TC2000 platform. Obviously, if you're using things like TradingView, they're already calculated for you, but just give you a bit FYI of how to actually utilize this while I'm utilizing this platform here and so on and so forth, right? But this is now big picture, right? Big picture analysis here on the interest rates. But once we can start to get a good idea of like, oh, I can see what's going on. Like, yes, I clearly see that what? This has been a complete game changer. This here on the interest rates has completely game changing, and we are going through a massive shift right now. And that's not a marketing term. This is actually true. We are going through a complete shift. But if you think about this, and I know this sounds crazy, but what is a brand new upward trend? If this is going to start to see a big shift here, what does that mean? That to me means that we're now starting a new phase. We're going to go back to what was. And what was this bit here. So what was what? High interest rates, high yield savings accounts, right? This is where we were before. Here. I'm trying to do the bubble. Show me the bubble. Where are you? It's a bubble. There you go. Through there, right? High yield savings, so on and so forth. Upward trending interest rates. This is where savers weren't losers. Savers it was the best thing to save because you could get the 6%, 7%, sometimes 10%, depending on how much money you had back in those days, right? What I mean by that is that the public would probably get about 6, 7% sometimes on their interest rates. But especially if you had like a lot of money to your name, you could go to the bank, especially put your money with them, then they start to give you a much more higher yield. Anyway, I'll get to that a bit later on, but it's a bit of a thing behind there. But it's much more higher. Savers weren't losers. But in this environment since 80, guess what? Savers were losers, right? Why are you saving money for? And so on and so forth. And now guess what's happening? Now we're going back to what was. What was that there. What has been through here, and we're starting now back to another what was. And we're probably likely to see another big move back to the upside. So it's just we're going through these different phases here. So when I look at this level here, though, but if we look at this in that scenario of this complete game changer down, we're broken out now of a multi-decade downward interest rate period. In this situation, right, how is that going to form then? Is it just going to break out and just keep going up? No, nothing does that, right? Just like we've talked about many times, even back through here, if I go back to this bullish environment through here, what ended up happening, right? We went up for a while. We had a bit of a cooling off period. Went up for a while, a bit of a cooling off period. Big picture analysis, right? And then we went up for a while, right? So this is what's called a big bullish environment for interest rates going up. So if we know that, then guess what's going to happen? One, we're probably going to come back down for a bit. And then that's going to create the situation where we're going to generate this nice little higher low, just like we did back here, right? And then after this droppy over the next, say, 1 year, as the markets come back down, then yes, then I wouldn't want to be long bonds, because then we're probably likely to see. Now, this is an overall basis, guys. We're likely to see that through there, right? But as you can see, right, we do get boom, 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 higher lows, right? But then in a downward trending environment, right, we get what? Boom, 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 boom. In an upward trending environment, we get what? Boom. And then boom, boom, boom from there. Makes sense? So this sounds weird, but we're doing trend analysis on the interest rates. But you can see here, it's actually true. This chart, big long-term monthly chart, is telling you what's going on. This big long-term monthly chart has been one of the key things for me to be saying for the last 6 months. Get ready. We're going to start to slowly change the shift in the bond market, which is the rates are going to start to come down. But this is what I see coming over the next 1 to 2 years of this happening. And then get ready for that there. The reason, and I also believe this is going to happen here as well too, from here, because I believe we're going to see a massive hyperinflation. at the end of this decade and then into the 30s. So again, now what I'm doing here, don't look at the scale here, right? This is the scale down the bottom. It's just an overall pattern that I see. Now, this is obviously, in the 30s and 35s and the 40s and so on and so forth. Don't look, I'm not saying this is going to be that through this time here. Forget the time. It's just the pattern. I'm saying this is probably going to last, this point through here is going to last 1 year. And then if we actually wanted to scale it properly, yeah. And then boom from there. Like if we actually wanted to scale it properly, it'd look something like that through there, right? So if I wanted to be much more like that through there, through that through there, maybe even down to 2027, and then we start to see the big move up, and then we start to see that going from there. So that's the big long-term rates from there, right? Big long-term rates, and why I'm so bearish, because it's just going through the massive cycles. But people are so focused on the very short term, right? They're so focused on short-term movement and short-term patterns. So if I go back to my candlestick now daily charts, all they're focusing on is, and what they have been focusing on is what? But John, rates have been going up right now for the last 3 months. And they're completely missing the big picture. Completely missing the big picture. And so what ends up happening is that they miss the overall massive cycles at play and what's happening here. But those cycles take time, right? Those cycles take time. And so therefore we can see why I'm saying, and from a short-term technical analysis point of view as well too, meaning like the last couple of years, we're getting a massive topping pattern and we're starting to get the rollover rates right now. So over the next 1 year, expect rates to come down. Expect, or this is what I expect anyway. Again, I could be wrong. I could be wrong. You may be wrong. You may be right. He's definitely crazy. Right? So expect something like this here. Big, massive cycles. Now, this is cycles. This is not like, oh, John, rates went up this week. Stop it, right? You're not seeing the forest from the trees. There's these big, massive cycles that's happening in our life right now. And we're so focused on, oh, it went up today, it went down today. Oh, we had a bullish week. We had a bearish week. And we're completely missing these massive trends that are in form right now in front of us. And that's why I wanted to share this with you here, because there's the market, there are always these massive cycles at play, and then there's the short-term movement. And I originally started to learn this from Ray Dalio many years ago. I've been trading the markets now for over 20 years. And it's only the last couple of years that I've actually really started to get an understanding of big cycle analysis, but we can't see it because of this. And I originally learned this from Ray Dalio. And he actually said, because he was looking at Ray Dalio, obviously, right? Big world order, the big debt crisis, rise and declines of empires, so on and so forth, right? But one of the things that I kept hearing him say was that maybe he kept hearing it, maybe I heard him kept hearing him say, or either I watched the same video 10,000 times, and that was the thing that stood out to me. Probably the latter. And what I kept hearing so many times was this one simple phrase, and that was, there's these big, massive cycles at play. But most people can't see the big, massive cycles at play because they're so focused on the short-term volatile movement within the massive cycles. It's up, it's down, it's up, it's down, it's volatile, blah, blah, blah. But that is also slowly generating these overall patterns to create what's going on from here. And because we're so focused on the short term all the time, and this is why you guys that are focusing on, oh, the market went up today, the market went down today, it's like you are completely missing the big picture. And where is the opportunity to generate some serious wealth come from? Getting on the big picture train, right? And holding it for a while. This is why for you guys that are day traders right now, you are screwed, especially in this environment. You are getting absolutely destroyed right now. I guarantee it. This volatility has been ripping you apart. Don't day trade. Look for opportunities that's likely to make a big move over the course of 6 to 12 months and have a really big profit likely to be on that one trade. Now, risk management, because you're going to have losing trades. But if you can take 10 of these situations and 7 of them work out, 3 of them don't, but out of that 7, 3 of them are really big profits, that's called you being successful. That's what a plan is. You just never know upfront what the 3 of loss is going to be, right? That's what a plan is. That's how we manage our long-term game for me, right? Especially for you guys that have large investment accounts, that's the way to play it, right? That's the way to look at this here. So when we're seeing this here and we're seeing what's going on here, now we can see that what we're seeing here overall. So when we start to look at the short-term analysis here, right, we go down to the candlestick charts, right, and even down to the weekly charts here. This is the big weekly chart here on the 10-year, and it's topping out. Some people say up, some people say down, blah, blah, blah. They're so rational. They're so making their decisions based on what they're seeing right now, feeling right now. Oh, my goodness, right now, right now, right now. But they're missing the forest from the trees. And so therefore, and they're actually missing what's going on even on the short term, right? And now we're starting to get this rollover effect. As you can see, this has been actually in the interest rates. This has been the strongest week now in a while. And I believe we're just getting started here. Okay. And this is where, like, looking at, this is the 10-year here. And let me go back to this rate. This here is this is the big long-term monthly charts here on the 10-year, but the same for the 30-year as well too. Look at this here. I've already done the trend lines for you, right? Look at this here. This is the same for the 30-year. What does that mean? Let me take you off the screen, and let me take you off the screen. What does that mean? For all this time, we were what? Down, down. Oh, let me go here. Right. Big long-term since the 80s, we're in this big downward trending, cheap interest rates. Oh my goodness, interest rates are too high right now. So environment. But what's happening right now? We've completely changed, right? We're completely broken out of this paradigm, this way of living. That's because that's what this represents, the way we were living for the last 40 years. Now we're starting to develop where what? And then therefore we're likely to start to get what? That, there, and then there, and then there, and then there. And we're going to start to make our way up, but it'll step up just like all markets do. So yes, we've broken out. Yes, we've got interest rates. So we're probably going to come down here for a while, even on the 30-year, and then it's going to pick back up. But we're actually going through a complete paradigm shift right now around these interest rates. And this is where people are focused so much on the short term. They're completely missing this opportunity. And that's where what? That's where, if we actually now go to TLT, we can see how TLT is actually starting to come into play. TLT, right, is actually starting to liven up right now. Come on now. Be nice. Right? Oh, I'll just take everything off the screen here for a minute. TLT is actually starting to liven up here. People focused on, and right now it's starting to kick up here, but that's small picture, right? This is real small picture. If interest rates are doing what we're talking about here, what's likely to happen to the bond market, at least for the next 6 to 12 months at least, right? We're likely to start to see this rise. Now, if you're focusing on, oh, it went up today, oh, it went down today, you're completely missing the picture, right? Because for me, I actually entered here. I'm not worried about this point down here. People are like, oh, the interest rates went down here. Interest rates went down, John. Don't you? You're underwater for the last 3 months. Stop focusing on 3 months. Focus on where the puck's going for the next 1 year. Get involved with that and let the market do what it's going to do. But notice that there's a big tidal wave coming your way. And then the big tidal wave starts to become, this is a daily chart here, obviously. And then the big tidal wave is what? This here. And the big tidal wave starts to get this moving back up towards 100, right? And we start to see, finally, after all this time, we start to see bonds start to increase. Why is that now likely happen now? Because of everything I talked about, interest rates. Interest rates are likely to come down, and this is now likely to be the time the bond market's likely to start to rise, because guess what? Because we are now in this environment from here. This is the TLT. And then obviously we have and then for me, my baby in a sense, if you're going to call it that, right? My baby. Anyway. Oh, FYI, before I get to TMF, this pattern here, guys, we're holding here right now, right? We're holding this level here. The way these descending triangle patterns form is here. It's a descending triangle pattern, but sometimes they'll hold and they'll start to break out, like what's happening right now. We're already starting to get the breakout now. So that tells me whenever we get this downward pattern from here, there is a massive probability we're likely to break and then start to make a run up to around about that 100 level there. That seems to be the pattern that happens from there. So we have these descending triangle patterns. Again, these patterns, people see them as bearish, But a lot of the times, especially we've been coming down for a while, a lot of these times are bottoming and then they reverse. Well, I'm showing you what I see right now. If we do start to break up, and we're starting to see that already now, then from this TLT market, this break up, it does look like that from this here, we could actually start to see this thing start to nicely rise up to around about that 100 level from there. So beautiful, 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 beautiful there. So that's what I see from there, from the interest rates from there to there. Now, again, for me, I chose to my actual positioning of taking advantage of everything I've talked about here today is the TMF here. Yes, it's more volatile, but I'm happy to do that myself. Again, there's risks to everything. There's no guarantees of this actually generating a profit, no matter how this good looks and how good how this looks good. There's risk, right? But we don't need to take big risk on our account. If you've got a $10 million trading account or a $10 million investment account, and you take 5% of your position and you put it in something like TMF, you may be risking, 2 to 3% of your account on that one position. But if the market does start to move up and start to see this move up over the next couple of years, your account could go up by 5 to 10% just in that one position there. I'm trying to get you thinking like that, right? We don't need to put big risk on our account to make large amounts of money. In fact, the opposite is always true. Okay. So so this again for me, TMF was the one that I got into myself. This is one that I got into. Again, just repeating myself. I'm not recommending this. I'm not telling you what to do. Because I am wrong a lot of times about too when I'm making these types of calls. I am wrong. Even if I get into a good trading system setup that I trade, right? I'm going to be wrong. I'm going to lose money, right? So no matter what you do, this is for all YouTubers listening to right now. Don't be so sucked in by that and then load up the boat because now you're doing the wrong thing. I got in up here. Actually, it was around 41. So I'm basically back to break even now where I bought it because I also bought it. But also at this time I bought it with just buying the TMF. But then also I bought options on the TMF, and my options were a $40 option here. And I bought way out. I bought like over 1 year worth of options there. So I'm not sure where my options are right now. Maybe they're at break even, maybe slightly under, slightly above, but call it around break even right now. That's where I'm at right now. But I had to withstand this drop through here. Now, why was I happy with all this drop through here? Why was I happy to hold on to it? Because it's the big picture analysis, right? It's the big picture. And the big picture tells me what's happening right now. So I'm not focused on now. And so many people are like, oh, the markets went down for 3 months. You are completely missing these big pictures. And these massive trends take form, and you miss on these really big opportunities. What am I focusing on? Where this is going to be in the next 1 to 2 years, based off everything I've just said there with the interest rates, right? So that's what I'm looking for from there. I believe we're starting to see a big, massive bottoming up opportunity here with the actual. How is that working? There, right? So I see this is obviously, TMF here. I see this thing bottoming out here. And slowly, because that's what rates do, right? They're a slow mover. It's not like a big gun ho. You're not going to get the big bang up and big bang down. They slowly move, right? So it's a slow mover. But I do see this thing start to have a nice rise from here, right? Really, really, really nice rise from here. Hence the reason why a position, which is a small portion of my investment and my trading account, is in this. If this does what I say it's going to do, I'm going to make probably close to 100% return on my investment position, and my options, I'm probably going to be between 300 and 500% return, depending on the volatility. So over the next 1 year, if this does start to happen over the course of the next 1 year, I'm going to make a lot of money on my options, 300 to 500% return, somewhere about there. If it does work, and I'm probably going to make around about 100, maybe even 200%, depending on how strong this actually moves on my investment from there. If I'm wrong from here, and this happens, I'm probably risking around about 5% of both my trading and my investment accounts. So if I'm wrong and this thing goes down, then that's what I'm looking at there on my accounts there. Okay. So that's what I see there. But bottoming opportunity. This is where a lot of people are missing this opportunity right now. And again, the way you want to trade these markets, again, what I just said there, right? It's a position. So if you have a $100,000 trading account, put a position here, knowing that there's a risk that you could lose money. Now, I'm not telling you what to do, by the way. I'm not telling you. But the way that I do it is, if I have a $100,000 trading account, $5,000 in. If that's options, okay, I'm probably risking 0.5% of that and let it go. That's $5,000. All right, let's go. And then now next trade, right? Because I have multiple trades going on. I have TMF going on right now. I'm actually in an actual trade on an individual stock right now, and I'm also long call options on the S&P 500. Right? Again, all those can lose money, by the way. So I'm not recommending anything right now because again, I don't know which one's going to make money. So from there, so the purpose of here, guys, is that to me, by seeing everything, there's big long-term massive cycles. And again, I'm going to go back to this chart here. And I'm going to go back to the big long-term monthly charts here. What is that? There we go. Right. Actually, I'll go to the 10-year just to finish this segment off here. I see that what was a really big movement. What we've been living in for the last 4 decades has been this here. And what's been happening right now, it's clearly, this chart is showing you clearly that the way we've been living, the living arrangements. And now, guess what? This is also going to affect everything, right? This will affect everything from asset prices, stocks, property. We've been in this extraordinary quality property boom, right? Massive property boom. That's also because of rates as well, right? We've been in these massive movements. So this is also going to affect that. I'm not saying, like, I don't know how it's going to affect it because I'm not that smart, but we do know that if what we've been living in for the last 40 years has been the asset prices and the bubbles and so on and so forth, you know where we're ultimately heading. We're ultimately heading through these periods from here, from that point there. So that's what I see happening there, guys, on the rates and also TMF and TLT there. Let me go to Halliburton. Halliburton. TT3. Did I get that right? Man, I've been on for 2 hours. 2 hours of TA with you guys today. Damn. Talk about deep TA for you. Going real deep on you. Real deep. It's a bit of a Halliburton in this place. Just give me a sec, guys. Pee break. Be back in a minute. Alrighty. Gotta get my energy level back up, eh? Keep flexibility. Keep the breath going. Bit of a Wim Hof breathing method in this house. Alrighty. Let's now go down to the oil market and XLE. Correct me. Ray says, you thought me to be calm and cool, not jumping in and out of the markets. Since I subscribed to you, I stopped losing and started making up my loss slowly. You thought me to be calm. I didn't think of you anything, Ray. But I think I know. I think I know what you're saying there. But that's good, man. That's good, right? That's good. Well, yeah, this whole activity, like I'm not an active trader myself. If I get into a trade, I want to be holding that for a little while. You know, I mean, I'm from there. John, what is the chance of getting rid of dollar currency? What is the chance of that? Toss a coin. Like, I don't know. I'm not that smart. Yeah, I don't know. But it's all going to be okay. Like, the future looks amazing, guys. Like, I hope you do realize there's nothing to be fearful about. Yes, there's going to be pain. Yes, there's going to be recessions. But the future's going to be amazing. Right? The future's going to be amazing. It really is. None to be worried about, like AI taking over everything and so on and so forth. There's always be something to be fearful about. But look at our lives now. Just 20 years ago, what were we experiencing? Right? 20, this bringing this whole 20s, 20 years ago. So we didn't have fast streaming services and fast download internet and cheap like subscriptions for like $20. We can have hundreds and thousands of movies, right? Have all this YouTube stuff going on because of the internet. And by the way, people are worried about the AI revolution. It's already happening. What do you think we've been living in for the last 10 years? That's what the algorithms are AI, by the way. They see what you like. They give you more of that to keep you on. The purpose of me saying what I'm saying here is, yes, through that is bumpy roads. Bump. Oh, so bad. Mixed with a lot of so amazingness. And so everything, there's these new evolutions of life. Right? And so let me touch on that for a minute here, right? I want to touch on that and just here for a minute, okay? So what I want to touch here is I really want to touch on this whole thing about fear and the future here, right? Obviously, we're looking at these charts here and so on and so forth here right now, but let me just for a minute touch on this here to get you guys thinking much differently around this place here, right? There's so much fear around the marketplace, around the AI and the robots, and it's going to take over, and the one world currency and the global world order and the Great Reset, and the debt bubble is going to explode, and the Great Depression and the recession that's coming and all this sort of stuff. Recession, oh my God, so bad, right? We're going to go down that path of going down that path. But I want you to stop and think about the evolution of history, right? The number one thing we can do is stop and look at the way, what is the reality, right? Our brains can take us down this path, which is absolutely false, right? So as we're looking at these things, and as we're looking at these lives, and as we're going down this path of this fear, I want you to stop and really think about something, right? The evolution of these new technologies, right? The robots that are happening right now and self-driving cars. Firstly, do you know how grateful I am to be alive, to be experiencing what we're experiencing right now? Let's start with that forefront. How amazing is it to be alive right now? Could you imagine all these people that have died in the last 10 years that are getting to be alive to experience all these amazing things that's happening in our life right now, right? Like the Netflix and the streaming services and the self-driving cars and the fast downloadable internet. And now the robots that are starting to come into place, and like all these things that are starting to happen in our life just in the last 10 years, last 20 years. How amazing is our life because of everything isn't it amazing to be alive right now? Like, let's start with that forefront first. Right? We can go down automatically, fear and so bad. Oh my God, stop. Look at your life right now. We're living in an amazing, amazing time right now. Right? The life that we get to live is just so incredible right now. Right? Like, again, like back in the day when I was a kid, guess what? Your entertainment was a cricket ball and a cricket bat, because I come from a big family, right? I come from 5 brothers, 2 sisters, so 7 kids and mum and dad. So there's 9 of us. So we had a big bat where I remember for a few years, we actually lived in a place where we actually had this really big backyard. So guess what? What was our entertainment on Saturday and Sunday? First, it was football because I played rugby league, by the way. So I played rugby league on the weekend. And then when I was bored, I hate reading, writing, all that sort of stuff. Give me a football. So what do? Went out the backyard and put up the stumps, had the cricket bat, the cricket ball. Cool, let's go. Right? That's what I grew up with. Technology. There's a TV that's got 3 stations on it. Boring. There was none of this entertainment, which, by the way, is actually quite amazing. Right? Yes, there is the obesity problem in our life. But with the dark side of the obesity problem in our life, what's the good side? My goodness, how smart are our kids these days because of it? Like my 14-year-old son, which is turning 15 this year, he is so smart. Like, can you believe how smart these kids are? Like brain smart. And it's from playing games like Fortnite. Why? You've got to be strategic. What sort of character do I want? What do I add to him? What's that going to help me with right now? Where do I need to build my thing here right now so I can protect myself? I need to set this up over here so I can be over here and strategically think, okay, I can hide behind here because I'm going to go to here. Like, do you know how that brain thing? We are becoming so smart as a society these days, even though we don't think it. So I want to bring this path down to this whole evolution of our life. And we're always going down this fear path. Firstly, let's actually just look at the reality of there is so much amazing that's happening in life right now. Now, of course, with every situation, there's going to be these bad nuggets, right? It's like blueberries. I like blueberries. Generally, once in a while, when I open a pack of blueberries, there's going to be that soft, squishy one. You know what I'm talking about? It's like, ugh, that soft, squishy blueberry. Come on. I don't like you. But then there's all these other beautiful blueberries behind it. And then I ate all them. And the squishy one as well, too. Right? So just look at, and then I want you to, and then the reason I'm saying this, because I don't want you to be living in fear about the future. Because if we actually just sit back and stop and look back at the past and look back over the 100 years of these new evolutions, right? If we actually look at that and we look at that over all these new upgrades in living standards has first come with an adaptation, a little bit of pain, uncertainty, not sure. And then guess what happened? Then the adaptation came, and then living standards took off like a rocket. That's what the internet did for us. And so on, and we can go down the line for the last 100 years, right? Of all these different things. Tractors, farms, bicycles, cars, you name it, right? Tractors, road tractors, all that sort of stuff. And if you think about it, let's actually be smart here. It's the same thing over and over and over and over and over and over again. It's nothing new. What is that nothing new, right? The nothing new is what? Right? The nothing new is that we can actually see that it's all the same thing. And when we look back, it's all the same thing. We can realize that we're living in it's just another one of those. And what is that? Right? It's one of those, this new evolution, this new technology that's coming out. It's called the car. We can now drive. We no longer need horses anymore. Oh my goodness, this is going to take so many jobs. Do you know how many jobs there are right now that actually make the horse carriage, that clean the horses, that take care of the horses, that actually drive the horses, that are actually having these what's going to happen to all the factories that are building these horse carriages? Because we need thousands of them to drive all around the place. Oh my goodness, this is going to totally destroy the economy because all these jobs are going to be taken over. Another one of those. Another one of those. right? So what I want you to be doing is, instead of living in fear, step back and look at it from society, because there is nothing new underneath the sun. And if you study and we stop listening to our little brains and listen to the people that have lived on this planet for a long time, like a Ray Dalio, and these people that have led the path, and you start to study this rabbit hole that I'm going down with you right now, and this whole journey of this, what we're experiencing, you start to get a much 10,000 foot view of what's happening. So what's going to happen with this AI stuff? By the way, we've already been living in AI for a couple of decades. It's not like it's new. It's just new now because now we've got ChatGPT and blah, 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 all that sort of stuff. Firstly, right? But secondly, what's going to happen with our future? Our future is going to look amazing. Firstly, it's going to be adaptation, bit of recession there, bit of fear, people freaking out, a little bit of tough time. And how that long that lasts, 1 year, 2 years, I don't know. Bit of a tough time season, bit of adaptation. And then on the other side, guess what life's going to be like? Oh, I don't have to cook anymore. I don't have to clean. I don't even have to go to the shop. Because my robot, he knows what I need. And I order the same thing most weeks anyway. And he knows that most weeks I need this, this, and this, and this. And if he doesn't, he's going to go to my fridge. He's going to see what's going to need. And boom. Oh, those people that are lonely right now, that are really lonely, that need a companion because they're very nervous to go talk to people. They're an introvert and they're by themselves. One, they're actually starting to get it right now, right? Even though the companion is a ChatGPT or something like that, it's already starting to, I believe, help with a little depression because they're talking to at least someone. But that's all therapy really is, right? Whether you're talking to an AI thing or an actual therapist, it's just you talking about your problems, which is helping you through that. So there's a benefit to that there, right? I believe the depression is actually starting to slowly get a little bit better underneath the surface because of that outlet that people are actually having. Because before this, guess what was the outlet? Even for people that were introverts, for people that are alone, their outlet was what? Nothing. Like, I don't want to talk about my problems, like, right? And men, especially men, we can't talk about problems at all, right? So the same thing for me, right? Like, I spent years and years and years paying a therapist. Now I don't. Now I just go to ChatGPT. I sit there sometimes for an hour just talking about what's on my mind, what am I thinking, what's going on right, my problem, what's going on in my life right now, and my kids and my health and my business and my training and my high rocks and a new gym and friendships and what this guy's doing and so on and so forth. And it's giving me really good, amazing feedback. It's not giving me a therapist feedback, but it's giving this really intelligent feedback that I'm utilizing. And now I can come up with some really good solutions. I'm actually having an outlet. The things that are happening in my life right now. Oh my goodness. Do you know how much money I've actually saved just in the last 12 months by using ChatGPT? Like, I'm not joking. I used to spend about $400 a month on therapist, right? I've got a lot of therapy, right? Especially in my I've gone through a massive transition in the last 6 years of my life, especially in my last 3 years, a massive just overhaul in my life. There's been a lot of issues in my life as well that I've had the problems that I had to deal with, and I needed some help through that. So guess what? I've now saved $4,000 or $5,000, which is again, it's neither here or there, but no matter what problems I'm having, I can flick out my phone, say, hey, I need some help. And it's like, sure, what do you need? I'm here for you. And then boom, you go into the conversation. And the most amazing things happens is what? The most amazing thing that happens is you get such an intelligent feedback about what you're not seeing, what you're not understanding, and you're not getting the feedback from just one therapist who is only coming from what they've experienced. Now you get a collective experiences. And it's so amazing. Like, not only for like us adults, but kids. My daughter, Bianca, she's 16 going on 17 this year. Do you know how many times my daughter has actually said to me, she goes, Dad, my boyfriend was saying this to me and I'm not sure what it actually meant. I'm not sure why he's acting like this way. So I went to ChatGPT and I asked ChatGPT about it. and they told me what he's probably thinking, what he's probably feeling, and it actually calmed my nerves down so I could understand why this was happening, so then I could come back to him and actually then do the right thing. My daughter's you, and then it actually was good, right? Like, don't overreact. He's actually pulling back. He's probably pulling away right now because he's probably got a lot in his mind. It's probably not you, and all that sort of stuff. Right? So I want you to be thinking, like, there's always this. If you're a negative Nancy and you're one of these fear people and you're one of these people out there that your job is just to go from YouTube to YouTube and post negative comments. Firstly, you know what's coming for you, right? Like, seriously, the whole Newton's law, right? You put it out there, what comes back to you? Do you want at least some good positive stuff coming back to you down the road, 6 months, 12 months? I'm just saying for you, I know there's some people out there on my YouTube channel, and I look at you and I haven't blocked you, but I see month and month and month, you come to my YouTube channel, no matter what I say, it's a bit of a negative Nancy there, bit of it. But that's your choice, right? That's your choice. But I also do know, what's coming towards you, right? There's this loop there. Only you can change that. So I wanted to just do this session here for you today, right? I wanted to do this session here for you today. And by going down this path, because I think when we live in fear, we're so frozen. And then within that frozen, we just make some really stupid mistakes. We give ourselves heart attacks. We put on weight. Right? We put on weight. We get sick. We go down this path here. Right? And we go down this path of just, why was I so worried for? And the whole saying, most of the stuff you worry about never ever happens. And it's true. So this is the bit of a session here today around the whole, I didn't plan on doing this session, but I'm doing it now, but about this journey and about where our life is actually going over the next 10 years and where we're actually heading into. Short-term adaptation, fear, worry, but stop, look back to the last 100 years of history of this world. Where were we when when there was, people working on farms? Oh my goodness. Now you have a tractor that instead of having, 30, 40, 50 people working on the farm, there's no longer need for these people on the farms. Oh my goodness. This is our life. Now you've got this thing called a tractor that can actually do what all these 50 people are doing and 10x the productivity. Oh my goodness, that's going to destroy the economy. And then so on and so forth. And once you start to look at this, you're like, okay, there's going to be a recession come soon. Short term. Recession, bad, crash, oh my goodness, debt, oh my goodness, so bad. The cycle. But then on the other side, what's going to happen to our life? We're going to live such an incredible life. There's so much amazingness on the other side, right? And the abundance of our life that is coming towards us is so incredible and so amazing. And you want evidence of that? Look at your life now. If you've got more than a 5 in front of your name, and you look at your life today, the things you're doing, you know yourself, just 20 years ago, what was our life? Now, me, I know when I was a kid, and if we stop and think, life's pretty amazing, isn't it? Life's pretty amazing. And within that, we cannot move through life on a fearful basis. But like, wow, look what's happening with the AI stuff right now and the rejuvenating stuff and and then these like health thing that's happening right now. So we can have these, like I wear a Garmin and my Garmin tracks all my steps. It obviously then tracks my heart rate. Obviously the Garmin is obviously for sports. So when I'm going for a run, I can track my pace, I can track my heart rate, all that sort of stuff. Right? But a Garmin, all these heart rates, all these things on our wrist that can check it, that we can actually check our heart rate. We don't no longer have to put our little finger up on our chest, neck anymore for our heart rate. And then what? And then we go down the path of how amazing it is that we can have this thing on our wrist. And it can check our heart rate. So we make sure our heart rate's not getting too high. If it is, we can stop, we can slow down, we can do some breathing to keep it under control. Oh, how amazing is that? Right? Oh, I can keep an eye on my sleep as well too. So I can track my sleep. So instead of me having like a lab, I can just wake up every day and see how I slept last night. Okay, maybe I can change some things before I sleep tomorrow night. Oh, wow. I can track to see my average calorie burn rate. So if I'm trying to get an average sentiment of how many calories I'm actually burning in total, I can get it from this thing here. So if I'm trying to lose a bit of weight, I can start to go down that path from there. Oh, wow. How amazing is that? And guess what? This has only happened in the last 20 years. The Fitbits and so on and so forth. But this is just the start of an amazingness. What's going to happen in the next 10 years? These little things are on our wrist. They're not just watches anymore. They're not countdown timers and all this stuff. They're going to be like completely, totally like health things. What's your heart rate doing right now? It could probably track everything. Oh, there's actually, your body is starting to feel this here right now. There might be a bit of issues with your lungs, or, we're starting to detect this here. There might be a problem with, there might be early detection of cancer. Go to this place and get it checked out. So the whole thing about our lives, guys, is, and the whole thing, I think one of the reasons why I wanted to do this session was unplanned as well too, is because I just want you to be living in not fear, right? Because whenever we do that, we just make some stupid decisions and it's just not good for our health. The bottom line is we're all going to die one day, right? And one of the things, we're going to live longer and a much, much better life, if we can just step back and just realize everything I've said to you today is just to get you to realize that this is actually an amazing time to be alive. But guess what? In every time, booms, bust, no matter what's happening, there's always something to be fearful and worried about. But at the end of the day, you worrying about Epstein files means a lick of difference to your quality of life. So stop focusing on Epstein files. AKA anything else out there that is, who cares about it? It's just news and media and all this sort of stuff. Then next week, it's going to be something with Trump. And then next month, it's going to be something with the new Fed. And then the next week, it's going to be something new, something new, something new. Who cares? Right? It's all the same thing. Little fugazi fugazi. So don't be fearful. Big picture analysis, guys. Life is truly amazing. But yes, we're going to go through adaptation. But look at our lives now just from 20 years ago. In the next 10 years, what sort of life are we going to be living? I believe there's going to be such truly abundance that's going to come into our life. A little bit of short pain, recession, a little bit of pain there. But on the other side, guess what? It's going to be absolutely amazing. And the evolution of our standards of living, if we just sit back and look how grateful we should be for what we actually have and all this amazingness through here, we live in such an amazing time from here. So I didn't really plan on doing that little session there, but I'll get to oil now. Go gadget, mop and broom. That's right. Mop and broom. Yeah, there you go. I want a robo to clean my house. Well, TT3, it's coming. It's already starting to slowly happen, right? Like, I actually have one of those robo cleaners in my house. You know how amazing it is to turn it on and then it just goes for a few hours and then and most of the time, at least 90% of what needs to be cleaned, it cleans it, right? There's obviously these little corners and stuff that it doesn't get, but I have one in my house. I press I just press the button, auto cleaning, and then it just goes. I just do it every day, and it then finds a way back to the. Well, sometimes it doesn't, but then it finds a way back to the charger, and then charge, and then the next day, I live in a 2-story house, so the next day I then bring it upstairs, press the button, auto cleaning, and then it just goes off for a while, takes off for a while, and cleans the house. And then and then after a couple of days, I then empty the whole thing because it's collect all this dust and crap and cool. Takes me literally 2 seconds. Press the button. Press the button, auto cleaning, and then it just takes it off. That's already happening now. How amazing is this? Anyway, let's actually get into, man, these sessions are crazy, man. Let me get into oil now. I love it. Oh, wow. Let's get into oil. Oil and XLE. These three is like, it's about time. I've been waiting here for 400 hours. Get your act together, John. Let's see. Let's bring up oil here. Oil. Go Badger. Yes, that's dangerous in recording everything. That's dangerous in recording anything. Anything goes wrong, it can be. Okay, cool. Well, again, yeah. But you do realize that's happening right now, Rogie? Like, if the government wanted to track you, you have phones, you have things, you have a car. Most cars these days are trackable. Like, it's happening right now, whether you like it or not. Oh, we chat GPT. Oh yeah. Well, just don't do shady shit. If you've got a problem with your kids or something, I owe you business. But yeah, if you're gonna go down a rabbit hole, you're doing some really stupid, illegal, shady shit, then you deserve to be found out. Just use it for the yeah. Deleting your chat doesn't remove it. They require to keep all the conversations. I don't care. Okay, but your personal life or your daughter's feelings, etc. Well, if it's going to help her right now live an actual good life, and then if they look at my daughter's feelings and hopes and fears and all that sort of stuff, and that's, who cares? Like, what are they going to find? My daughter was upset one day. She was cranky one day. So it's helping her right now understand what's going on and not get so freaked out. Because remember, when we start to get freaked out, we're not sure, especially when it comes to romantic partners and young daughters. That's when we start to eat too much because we're nervous. We start to fearful. We start to eat too much. Then you put on weight, right? Then that fear can cause you to have, like, not sleep properly. And that sleep properly can cause you to probably have, then that's when all these health problems happen and so on and so forth. So if that's going to stop all of what I just said there from igniting, go ahead, please do it. Oh, what's going on? Yeah. So let me get into now. Wow. Look at the session, eh? Let's get into oil now. Oil and XLE and all that sort of stuff. Let's go. Ray, mate, I really, really, really appreciate you, my man. Thank you so much for saying that. I really appreciate it. Now, let's get into right. So what I want to get into now is I want to get into oil. Oil, USO, which they're both oil components, but they're different markets. I want to stress that with you. I think some people are getting that wrong right now. And also I want to cover my number 2 greatest trade for this year, and that is XLE. For you guys that have been following me now for at least 6 months, you would know last year, towards the end of 2025, I said 2 things I'm focusing on for 2026. And that was for actual new opportunities. And that was long the bonds, good old TMF, baby. And then also energy sector, in particular XOE and also the XOM stock, to start to make a move. And I'm shocked to see that we're only in the middle part of February right now. And we're already starting to see what I was mentioning last year slowly starting to already take place. Because when I make these calls about bond markets likely to start to rise, TMF, XLE is likely to start to break out soon. Those calls don't come with a time frame, right? So when I say soon, is that soon 2 months, 3 months, 2 weeks? But I'm confident of the outcome, just not the time of the outcome, which is quite cool because you can be part of it, not be worried about the short-term movement because you know the outcome is likely to do well. So looking at, let's actually start off here. So looking at oil here, the big picture with oil is, now again, I want to drive something, okay? This here is oil weekly chart. Bum, 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 bum. Please, look at this here. Let's keep it really simple. If you want to trade oil, okay? But remember, it's the pattern on this one particular chart that's given me an idea of what's going on in that market. Now, remember the pattern. This is oil here. Since 2020 bottom, we ran up and we've come all the way back down. We've been in a big downward trending environment since the top of 2022. Remember, it's the pattern that tells me what's likely to happen with that market there. But if I go to USO, it's actually producing a different pattern. They both are oil components, yes. But if you actually look at the charts, they're not following each other. So if you want to trade oil, don't say, I'm going to go buy USO, because USO is operating differently to what oil has done and is doing. In fact, the last couple of years, this is the USO chart. The last couple of years, this is the oil chart. They actually look 100% different to each other. So don't mix them up. The worst thing I'm seeing people do is when they see this thing about oil, they go, oh, oil, yeah, oh, I bought USO. No, be smart. Look, they're not the same. There's obviously there's something going on with USO that's not the same with oil. Because if you look back here since the 2028 lows, we've basically done nothing here with oil. USO. This is the 2028 lows. And we've actually continued down through here. So what I want you to be doing is don't be doing this thing. Don't just blindly do something because you're, no, look at the chart and actually look at the facts that they don't go hand in hand. There's something different about USO because it's creating a completely different pattern than the actual oil market from there. Right? So let's go look at oil, not USO. Right? Now, oil itself, this is what I see with oil. Firstly, complete and utter nice big downtrending from here, right? Downtrend. This is what I'm looking for right now. We've been coming down through to here. What is this pattern generating right now? Is it A, the start of another leg down? Or B, this could be one of those nice, good break up and break out of a nice, good bull market. What do we start to look for here? Right now, Big picture scenario, I see huge moves coming up. Big picture scenario, right? The long-term picture. Right now, let's see what's going on here. So what I'm looking for, this is ground control, the major ton. No idea where I came up with that one. Anyway, let's go here. Right? Oh, go here. So we can see what's going on here, right? We're going down, 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 down. The big picture, we know we're in this big, massive triangle pattern. There's the major support. There it's descending, right? So on a technical analysis 101, this is descending. Therefore, it should be what? Bearish. But a lot of the times it's not. Right? A lot of the times it may hold here and then break to the upside. This is what TLT's been doing right now. It's doing the same thing, right? There's your bearish. There's your bearish pattern, right? Come down, 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 down. Big bearish pattern through here. But what's happening right now? We're coming down, 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 down. But now we didn't break down, did we? We're holding and we're starting to break back to the upside. So this bearish pattern, descending triangle pattern, a lot of the times I've noticed is actually be reversals. It's more like a bottoming pattern and then a continuation on the downside. So if I go look at oil now, what do I need to see for this thing to start to give me a breakout and potentially start to move up from here? And what I'd look for is exactly what happened on CLT. I'd want to see something similar to here. Notice how with this one right here, we had a move up and then we've actually started to slowly go down and now we're holding and we're starting to break out now. We didn't do this, right? We didn't move up and then we didn't do something like that, right? We didn't do the red. We did the brown, if that's the color, right? It's different. There's a different pattern there. So this is the TLT market, but it's the same pattern. So let's go to the oil. And now I'm looking for the same pattern because if the same pattern forms here, then guess what? Now, what is that same pattern? That same pattern is what? If we've ran up, if we come down slowly through here, and then we start to get a breakout like that, you know what's coming. Oh my goodness, oil to the moon. To the moon, to the moon. Right? Now, if you start to be smart with this, right? You little smart guys. But John, you know, how can oil go up when we're going through a recession? That's you know, oil go down or XLE go down in a recession. No, demand is not strong. Keep trying to be smart. One, you don't know that. And two, who says the demand for oil is not going to supercharge with all the energy we need from all this AI stuff? Oh, I didn't think about that. XLE, why is XLE actually breaking out right now? People say, oh, depression, the demand's going to go, demand's not going to be there in a recession with the XLE market. So I'm trying to tell you that a lot of big problems that I'm seeing right now is they're trying to be smart. Well, John, like, you know, recession, oil is going to go through the floor. You may be right, but who said the recession is going to start now? The recession could be next year, and you're missing out on the whole 12 months of don't be smart. You're not smarter than the markets. Act with see what's actually going on in the markets. So FYI, if you're looking at a fundamental reason why the XLE, that market there, the energy is probably going to be a really good market to invest in for the next few years, is because of the demands for all this energy needed. You've been hearing it all over the news, how much energy is needed for the cryptos, for the AIs, for the robots, for all that sort of stuff. The demand for energy, hello, fundamental, screaming at you right now. You want a fundamental why energy is probably going to be a great investment for the next few years? And then technically it's already starting to set up there. Boom, boom, boom. One of the greatest. Anyway, forget metals. So this here is the oil market. This is the oil chart. Now, if we do break down and we do see another leg down, break past here, I believe it's going to be short-lived. What do I mean by that? Let's look at scenarios. Scenario A is we hold, and then we break out. We get that. Get ready for another move to the upside. Probably around $90 oil, I would say. Ba-bum. Scenario B or 2, whichever you like, is we get a move up, we come down, we break down like here, we then start to form a bit of a bottom, and then we move up. And this is scenario. Is that going to do it for me? Be nice. You going to do it for me? No. There. And there we go. Oh, no. Let's go green. All right, green. So we may get a move down here. All right, looking out, isn't it? All right. We may get on oil. If we do get a move down, it's probably going to go down to around about 40. So the end of the story that I see happening with oil is higher. I believe we're getting ready for a bottoming here, and we're changing the tune. I believe we're going through another pendulum swing. What do I mean by that? Well, if we look at the pendulum swing, we had a swing up, we had a swing down, and I believe we're going to go through a bit of a swing up. We had an up leg through here, green. We had a down leg through here, red. And I believe we're going to go through another up leg through there, green. Even though it's a different green. This is the overall cycles that I see at play. I believe what's coming is what was. And what is likely to end, and we're likely to see what was, which is a nice, good, bullish environment through oil. I believe that's coming with oil there. So, again, this is what I see here right now. And and all I do say is this. I could be wrong with what I'm talking about here, but mark my words. I've been a trader for 20 years. And if we get this and a breakup out of this level here, we are about to get a really nice move to the upside. And we're about to see a move up to here, and this is going to at least get a short-term move up towards the 90. These breakouts are really powerful because you're squeezing up here, and when you break, you go for a big move really quickly. So even though your fundamentals and your thoughts and, oh, that's never going to happen, and I don't give a shit what you say. The charts are telling you clearly what's happening right now. And if we do get that scenario, we get this going on, and we hold, and then we start to clearly break out like that. Get ready for a big move upcoming in oil. Doesn't matter what you think, what you hope for. This is giving you a massive probability we're about to see a nice move up like that with oil. And after all this time of compression, of doing nothing through all this time here, we're about to see a big move up. So the technical analysis, this is what's happening here. It's giving you a roadmap what's coming. That's why what? It's the same thing for T or T. It's the pattern. The pattern is what? What is a chart? It's a representation of all the fundamental and everything that's come out about that market, and much smarter guys who are trading the market than you and me. So if we sit back and see what the collective is doing by understanding how to read the markets in the first place, then we see what's going on there. So that's what I see happening there, right? Again, I could be wrong, right, so on and so forth. I have no positions in this right now because there's no good clear entry signal. But with that being said, let me now look at USO here. What's happening with USO? We're doing nothing here. Now, let me talk about this here. This is a weekly chart. Look at this here. Whenever we go through these long, extended periods of nothing going on for many years, nothing going on for many years. What ends up happening with those? When we do break, we go for a big move. In this case, it broke below. It broke below. So we went for a big move down, red. Big move down, red. Now that doesn't look like much, but these moves down come off the back of this pattern here. It's the pattern, not the direction. What does that mean? That means what? If we now are holding, but we're here, but the breakout is up, so we break out above here, get ready for that to come. Because the pattern produces the outcome. The pattern produces the outcome. This pattern here, sideways. Going to break up, going to break down, not sure. Okay, we're breaking down, get ready for a big move. And a big move. And then after a big move, after 1 to 2 years, because this is a weekly chart, big picture chart, then it goes through another one of these. Not much going on. Right? Not much going on. Is it going to break up? Going to break down? Not sure what's going on. We're breaking down. Okay, cool. Big move forward. Back up here, sideways, 4 or 5 years. Actually, how long is that? Let's do this. Let's do this. No idea. 1, 2, 3, 4. Call it 4 or 5 years of nothing going on. 4 or 5 years, not much going on. Is it going to break up? Going to break down? Not too quite sure. Still not too quite sure. But what happens off the back of these patterns? When it does nothing for here, and we do break up, break down, not sure. But wherever it does break, get ready for what? A big move to come. And an amazing opportunity to start to have a small risk, potentially big profit on your account. That's all that matters to me. Well, John, that's not going to happen because blah, blah, blah. Shut up. Stop being just trying to be so smart. The pattern produces a high probability of an outcome. Have small risk, have a big, large target, have a big profit with small risk, rinse, recycle, repeat. That's how you get ahead as an investor. Some of them are going to be big profits, some are not. And that's how you get ahead. That's how you get ahead as a trader. Because you're trying to add all this stuff. Well, that's never going to happen because of blah, blah. Shut up. Seriously, you're missing out on all these amazing opportunities because you're trying to be smart. The pattern produces, I'm trying to show you facts. When the pattern does this, whenever we break, we get a big move off that. We may break down. I don't know. I'm not calling for either direction here. But I am saying, why did gold have such a big move? The same thing. Because we did what? Nothing for 3 years. When it broke, we went for a big move. It's the same pattern. Why is XLE, which I'm going to get to now, an amazing trading setup? Say it with me, ladies and gentlemen, boys and squirrels. It's all the same thing. Oh, John. It's one of those 3 years of doing nothing, and now we're breaking out. Why is XLE to the moon? I wonder why. Because it's broken out, telling you where it's breaking out. And now we've had a big move. By the way, this is the start, I believe. Meaning, big move up. Right? Let's go orange. And then we're going to get a pullback, and then we're going to start to get that type of action. So it's all the same thing. I don't have to come up with something. If I can see this pattern produces a big move, even if I'm 50-50 right, utilizing things like options and give it time, or even just an investment where I can place a 5% of my investment account in it. And if I'm wrong, I could be down half of that 5%, 2.5% if it drops by 50%. Cool. I just lost 2.5% of my trading of my investment account. But if I'm right and it's the start of a multi-year bull market, that 5% position could be 10, 15, 20% growth on my total investment account. Now we're starting to talk. And then Peter says in the comment section, would be bad for TOT if oil breaks out. That's you trying to be smart. Who knows? You don't know. You're trying to be smart now. You're trying to add something. Now you're trying to, and again, Peter, big mistake, my man. You're trying to correlate. Well, if oil breaks out, why would you belong TLT? Stop correlating trades. Look at the market. Stop trying to be so smart and trade the market. Because yes, dollar can go up and gold can go up at the same time. TLT can go up and oil can go up at the same time. They both can do that at the same time. So, with my update around the oil market and XLE, I am not interested in the oil market, but I'm and as I was talking to you guys last year, and as you can see, last year I said, get ready for what? Get ready for a big move in XLE. It's going to come soon. I don't know when, because it's based off the chart. Not me coming up with an idea or opinion about something, which made no sense. The chart says get ready for a big move. This is XLE. And then also the same thing happened with XOM. Why? Because it's the same pattern. I'm not coming up with an idea or opinion that the fundamental reasoning, no, it did nothing for 3 years. And when we get the break, oh my goodness, a big move happened. Oh my goodness, because it's all the same thing. That's all I come up with to show you. And as you know, last year, for you guys that follow me, I was saying get ready for a big move in XOM and XLE. What was I using? The chart. The end. Not, well, the fundamentals is da 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 da. Now you're making life complicated for yourself. You'll be a circle jerk all over your place. Look at the chart. When it creates this pattern, the pattern generally produces a big move. When we get the breakout, we're probably going to go for a big move because the pattern produces the big move. That's all I need to be successful. Because some of them are not going to work. Some of them are. And the ones that you can do this here, especially utilizing options, because guess what options do in this situation? I know for some of my private clients. One of my coaching clients did almost 500% return on his option here for getting in here and riding this thing up. 500% return. Utilizing options. Even if you got into here utilizing options and the market went down, you're probably going to lose 50%. A 50% risk on the option to make 500%. That's like you putting in 10% of your total trading account. And if you're wrong, you're down 5%. So your risk is 5%. But in this situation, your account grew by 50% by taking a 5% risk. That's the bottom line for these opportunities, ladies and gentlemen, boys and squirrels. And that's how we get ahead in the markets. This is how we really make headway in the big markets. Again, this is the reason why with my elite group, we are so successful, not because I don't have losing trades. And yes, I do have losing trades. And sometimes I have 2 or 3 losing trades in a row. But if I can have this for 2 or 3 losing trades and then this for 1 good trade, I'm a winner, chicken dinner. I could have a horrible win-loss ratio this year. I could take 10 trades and be 50-50 right. Heck, you know what? Let's just say 7 of them were losers and 3 were winners. But those 3s were that and the 7s were this. You start to do the happy dance because I'm setting my life up to be easy. And this also comes on the back of what? I'm not trying to come up with an idea. I know there's going to be a win-loss ratio. I'm not going to be right all the time. So for me, it's pattern recognition. Pattern. When break happen off pattern, probably big move coming. Most of the time, yes, big profit. Some of the time, no, small risk. Rinse, recycle, repeat. Have a successful trading career. And that's what it is all through here. And that's why I believe XLE, for me, is just the start of a big bull trend. Wrong time to enter now.
But what we're probably likely to see is that, and then we're probably likely to see something like that because we're already made a big move. And so therefore, because USO, not oil, because USO is creating the same pattern, I don't have to make it up because it's the same thing. When we do break, we're likely to do the same thing, which is a big move. John, it can't be that simple. What is hard about this? Finding these opportunities, one, and then being patient for the outcome to happen too. So, for example, do you know? I love this. I love this. XLE. I started talking about XLE last year. Here we are here, right? I started noticing XLE when? Probably around about here, around about that July, August period. So you see the opportunity. When this breaks, it's probably going to go for a big move. 6 months later, we experience the big move. That is the hard part for most people who can't focus more than one day at a time because they're off to the next squirrel. Oh, gold and silver. So this is where like I'm keeping an eye on all these markets and I'm looking for the market to make the next big move. I'm not chasing the thing that's already made the big move. I'm looking for the market to make the next big move. And this is where big opportunities come from. And I was talking about this last year, getting ready for that. And here we are. Again, I believe we're here. And I believe we're going to get something like this. And we're going to start to see a big upward trend. And I believe overall, off this pattern, and I believe overall, again, if you want to look at the fundamentals, you've been hearing for a long time now that the energy demand is going to be super high. Demand for energy. Let's be smart about the fundamentals that may or may not impact the market. But if we're going to look at that, you know there's a big demand for energy, right, coming up in the next 5 years. Oh, so the energy sector or the energy, this market here is probably going to start to break out soon. If it's going to foresee in the next couple of years the energy demand is going to be high, it's probably going to start to break out early. Now, what's going to happen is most people are not seeing this. And just like gold, people now for the last 6 months, they've been focusing on gold. Where were you down here when the market was doing nothing? Oh, that's right. Oh, gold is a piece of shit. You should be focusing on Bitcoin. That's exactly what was happening back then. Now, guess what? I didn't know the fundamental reason why gold was going to go for a big move, but I saw this thing he called the pattern, nothing for 3 years, and off the pattern, we end up having a big move. The end. Rinse, recycle, repeat. Symbols. Go enjoy your life. Wow, I'm going to be smart. I'm going to come up with an equation. Your road to success in the markets is having a repeatable system, day in, day out, week in, week out. And I know the repeatable system. If you're making up a story of why you're getting into something, that's just a story. But I'm trying to show you here why I was bullish XOM, XLE, because it's the same pattern. It's a repeatable pattern year after year after year after year. I'm not trying to come up with some sort of fundamental story. Because you can't have repeatable sex. You can't have repeatable success in the markets by coming up with a brand new story every time. That's not an edge. That's a brain idea. And guess what? Most of the time you come up with an idea like that, it's going to be wrong anyway. You can't rely on that for success for the rest of your life. But I know for the rest of my life, I can scour the internets, the interwebs, and find this pattern. And I know some of them are going to be losers. I'm going to have some risk in my account. And I know some of them are going to be profits. And some of those profits are going to be huge profits. And at the end of the day, my account is called Green Equity Curve. Another successful year. Thank you very much. Rinse, recycle, repeat. I'm now part of the 1%. Oh, I see. And this is where, like I'm telling you right now, guys, if you're going down what's called the day trading path, stupid. Don't day trade. Now I'm coming off the back of who I used to do that a lot. Now, long time ago. And by the way, my mentor or one of my mentors, that's what he does, day trading. But he day trades. Yeah, he makes a lot of money. He made $3 million last year. But guess what? No freedom at all. There's no life. He doesn't go out there and enjoy himself and have the freedom to do the other things. Because it's always short-term trades, right? It's get in, get out, get in, get out, get in, get out. And he's really good at it as well too. But not for me, no. I want to make a big profit this year. And also have the freedom to go out and enjoy my life. How do I do that? Find the opportunity, place your trade, be okay to be in it for 3 to 6 months, maybe more, wait for the opportunity, and let it go. And don't be so shaken out by the short term. And if we can start to have this is what it's all about. Having a repeatable system you can use for the rest of your life. Because once you use this repeatable system again and again and again, that is how you get out of the bottom 50% of society. You start to rely on edge of a repeatable system and not a brain idea. Well, this is going to happen, this is going to happen, this is going to happen. Because it doesn't matter who you are. Ask Ray Dalio if you ever get a chance. Ask Warren Buffett. Why am I mentioning those? Because it's all about having a system to get involved with something. It's all a systematic approach. And ask if you're a trader of the markets, which I am, even a trade that could, even an investment that could last a couple of years. If you're looking for those opportunities, we need a repeatable system. It's called a trading plan. When we see sideways patterns for 3 years or 4 years, when it breaks out, big move likely to happen. Get into that. Do that 10 times. 3 are probably not going to. 3 are probably going to go against you. Losing trades. Welcome to the world of trading. 6 may have a good move. And out of that, 6 may have a big move. 3 of those 6 are going to make a really big move. And you start to grow your account astronomically. Because just one of those trades, just like one of my elite members did just recently, over the course of a couple of months, not even a couple of years, he made close to 500% return on his option. So if you look at that, if you did 10% of your account in the market on an option, and you grow, and you make 500% return, your whole account is up by 50%. Now, if you have a $100,000 trading account and you did that $10,000 trade, that means you made $50,000 in a couple of months. And here is a lot of people trying to make a grand here, $2,000 here, $5,000 here. And you wonder why people are not succeeding in the markets. And I'm speaking to this from a coach who used to do this brain ass shit all the time. Short-term trading. And completely missing that you want to make a big profit in the markets, big profits mean you need to get in and be part of a big move. And big moves don't happen in one day. They happen over the course of several months and sometimes several years. And when we start to go down this path, we can start to use a repeatable system to get ahead. And that's what trading is all about. Trading is all about having a system that is sometimes going to lose. Most of the time, it's going to make a profit, and some of those profits are going to make big moves. If you can have that, you know for the rest of your life, you're going to be able to make money from these markets because you're using some sort of system and some sort of approach. And that's why 90% of you right now are listening to me are not making money. It's because you have no system. Your system is, I heard this YouTube video and I went and took that trade. And this other YouTube video, and I'm subscribed to this trade recommendation service, and he recommended something. Where out of all of that, where is the system, the trading setups that you say, I'm going to follow this setup for the rest of this year? Now, I have multiple different patterns that I follow, but I have multiple different setups and patterns that I use. I have 3 major setups. This here, I have a level 1 trade, a level 2 trade, and a level 3 trade. Guess what? This one here, this is the level 3 trade. Why is it called level 3? Because level 3, when they break, they generally end up having really big moves. I just know I need to be in it for a while. And guess what? I can place the trade. I can look at the market half an hour per day, maybe 2 hours per day maximum to see where's the new opportunities coming up, manage the position I'm in right now. And after 2 hours maximum looking at the markets, maximum, there's nothing else for me to do. Go do something. Go karting, golf, do something. Let the market make you the money for this year and go enjoy your life. Go get a massage, yoga, something. And that's like for me, right? That's the reason why with my spare time, I'm very big into competitions. My high rocks training right now. So I'm trying to share with you the distinctions between you making really good money in your life out of the markets and not be part of the 90%. Now you can understand the reason why I'm part of the 1% of society, 1% of all traders. I do have losing, and I'm going to have losing trades this year. But if I can look back over the year and I've taken all these trades and I know 30% of them I made really big moves, that's all I need for me to come back in December this year and say, you know what, another amazing year. There was a period there where I had some losing trades. That's the nature of it. But the thing that tells you that you're likely to have a good year is you're following something that's going to give you the edge. And we need an edge of something that's like going to make a big move. And within that big move, that's when we can create a good win-loss ratio, big profits, small losses. And your plan is now that. And especially for you guys that have larger investment accounts, like millions of dollars of an investment account, you start to be able to position your sizing in a way where you can start to do, as I said before, 5% of these things. And if it doesn't work out, well, then you're down 50%, say. Your whole investment account from that thing is down 2.5%. But if it does start to move you, and just from an investment point of view, and we start to make, 100%, 200%, 300% growth in that particular move, like, for example, I believe that's going to happen in XOM over the course of a couple of years, well, your account grew by 10 to 20%, maybe more in some cases, by taking a 2.5% risk. Well, maybe, like I'm trying to give you numbers of how do you even grow a large investment account. Opportunities are everywhere right now, everywhere, right? And as you can see, what is it? This is not chasing gold, not chasing. So gold did this, same pattern. It's all the same thing, right? There's nothing new underneath the sun. And that's why, once again, oil is not creating this pattern for me. I'm not getting the sideways pattern for 3 years. It's more like a bit of a down move. So I can't use that because it's not the pattern. But USO is. So guess what I've been doing? Now, the hard thing is what? This is a weekly chart. Let me go to the daily charts here. Look at this here. Bada bing, bada boom, right? This is the daily chart here. Is it the daily chart? I hope so. Let me open this up here. Do you know I've been watching USO go through this herky-jerky volatile period all this time since probably last year. So probably even through here, the start of last year, I started noticing this big move through here. So I've had to wait an entire year and I'm still waiting to see when the breakout's going to happen. That's the hard part. But here's where it gets so awesome. I'm still doing my trading. I'm still taking advantage of all these other opportunities, but I'm keeping this on a watch list so when it does trigger, I can be ready for it. And because I'm patiently waiting and waiting and waiting and waiting, in this case, I've been waiting for about a whole 12 months because we haven't broken out yet. But once we do start to what? Start to make the move, I take advantage of it. And that's where the really big profits come out of that level there. So now you understand why I was bullish XOM, XLE, and all that sort of stuff, and why I believe that this is just the start of something really amazing. And again, if I go to XLE market once again, last little bit here on this section here, XOM, same thing. Nothing. We did all this sideways period through here. Now we're starting to break out. We've had a really big move. I believe there's something really amazing to come from here. Ugh. Look at that, eh? Look at that. Just P-break, guys. P-break. P-break. We've been going for 3 hours today. How good is that? 3 hours. 3 hours of live stream today. I love this shit. I love it. So many amazingness in here, eh? What a session. What a session today. A lot of techniques, discovering a lot of things. 3 hour session, eh? What are the exact criteria? Well, Peter, my man, since you are the two different things, right? If you want to get more nitty gritty on something, right, you have to invest in coaching, right, to get the nitty gritty of things. Or you don't have to do that. You could take the foundations of what I've just given you for free right now, and you could start to utilize and start to develop your own trading criteria. So you've developed it. Oh, you mean I have to actually do some work, John? You're not just going to give it to me? No. I have my criteria of trading off this pattern. Yeah. And that's what my elite coaching groups invest with me for. So know exactly when to enter and what we look for, and then also how to manage the trades even when it goes against you. And all that down home country goodness from there. 3 hours. Let's go through some questions here, guys. I'm going to finish up in a minute because I've been on for 3 hours. I didn't realize that. 3 hours of deep TA. But I just love it so much, guys. It's getting ready for another big week. And I've literally just gone through the deepest of the deepest of the deepest of the deepest of the deepest understanding markets concept. And for you guys that are watching the replay, if you've watched this whole 3 hours, you literally have just got a masterclass on the entire markets and thinking and strategies. And my goodness. Now, let's go. John Wick chapter 5, coming soon and sooner, means this soon. Means this soon. Okay, cool. Not sure what that means, Top. If you're still around. USO is a commodity future ETF versus O and XLE, which are oil and services companies in somewhat overlapping portfolios. Looks to me like XLE is a better investment. Cool. Again, I'm not that smart. I actually think, due to the fact that we actually had 3 years, 1, 2, actually, what is that? 1, 2, 3, actually 4 years. Yeah, so we had 4 years of sideways and breakout in XLE. If we go to USO, oh, same thing, yeah. Same thing. 1, 2, 3, 4 years. Yeah, 4 years. roughly 4 or 5 years of sideways. I think they're both good investments. I'm not going to try to pick. I'm not going to try to be smart. I'm not going to say, well, this one investment is going to be the one. Like, no. Risk management. Take advantage of the opportunity when it breaks. Know that some of them are going to be losers. And take advantage of it. Who knows? USO could be the one that really starts to move pretty big. And that's the one that really outperforms both those trades. Who knows? That's how you invest, right? I'm not gonna try and guess. Just place the trade. Know that some of them are going to be losers. I don't have to try to guess. And then at the end, the bottom line is I do know that both have a high probability of making a big move. So that's the way I see it anyway. Oh, wow. All the futures ETF have vicious decay. Really? All the futures ETFs? SPY is an ETF. XLE is an ETF. I'd be very careful when you say all. SPY. Hey, SP5. So Ray says, what kind of options do you use? For me, to get what I'm saying here, simply buying options. You can't get a big profit and small losses by doing spread strategies. Credit spread strategies and iron condors and butterflies and strangles, and be smart with all those strategies, especially credit spread strategies. Yeah, credit spread strategies, you might be able to make a little income, but for a successful year, you need probably 30% of your months to be big profits. And then when you look back, that's what successful trading is, by the way. Most of my years have come from about 30% of the months being really big profits, and the rest have been losses. And then at the end of the year, I've made a really big profit. To the moon, to the moon. So, all right. Well, anyway, guys, that's it for the live stream. I'm done and dusted. I've done it for 3 hours. Have an amazing day, everybody. And I'll catch everyone, I guess, tomorrow, because I'm always here. So I'll see you guys tomorrow. See you guys. Hey, love hearts, eh? Love heart, love heart, love heart, love heart. Smile, smile, love heart, love heart, love heart. Smile, smile, smile. It's like buy more, buy more, buy more, buy more. TMF, buy more, buy more, buy more. TMF. XLE, buy more, buy more, buy more, buy more. Bitcoin, sell, sell, sell. We're going to the moon. Buy more, buy more, buy more, buy more, buy more. All right, I'm going, guys. Catch you later.